Number.
So we get payrolls later on. Before that, we get obviously the open of the European equity markets. As you said, Kriti, markets not going anywhere in a hurry, just seconds to go until we see the open. We've had a bit of M&A to talk about in the last 24 hours, certainly in the paper space here in the UK. So we'll see how that plays out, but that could send some shares higher. And of course, we had Joe Easton talking us through the possible losers as well from Germany. So European equity markets just opening up this morning, flat on the FTSE 100 as it opens, as it gets out the gates. Waiting for the CAC 40 and the Xetra to open. The IBEX is up by 0.1% over in Spain, so no great movement there. The US futures picture also looks pretty divergent. E-minis up 0.1%, NASDAQ futures down 0.1%, waiting for payrolls. Waiting for payrolls, or perhaps waiting for the inflation print next week.
Tuesday will be really interesting. I think you could take, it's going to be interesting to see how long it takes to get HelloFresh open this morning. I think you're going to see a big move potentially there. That was certainly what Joe was talking about earlier. So you could see a big move down in that, so that could affect how the German market ultimately opens up. Beginning to see a little bit of movement in the German market, but not a great deal. So in terms of the early movement, Grifols is up, Rubis is trading a little bit higher. Looks like some of the semis may be a little soft this morning. So in terms of the impact that maybe we're seeing rippling out of what happened last night with the semi story in the States, maybe that's somewhere we could look. But Novo also softening up. I'm not surprised that Novo Nordisk is soft this morning after the move yesterday.
Yeah, we've got BE Semiconductor, that's down by 2.6%. Yeah, the read across from Broadcom perhaps to some of the as you say, the semi space
is higher.
Yeah, ASML up by 0.6%. So that explains why the technology sector as a whole is higher, because it's such a heavyweight, of course. But yeah, we're biased to the upside here for European equity markets, even if we're only up by 0.1%. Most sectors in positive territory.
Yeah, let's talk a little bit about the commodity sector as well, because if you look at some of the biggest index contributions this morning, you've got Shell, you've got Total as well. You even have BP in there. Not necessarily a broad commodity story, very specific to oil. I wonder how much of that is a geopolitical read-through, even though on a macro level, if you look at Brent crude right now, only trading an 83 handle.
Luxury is the other thing that stands out. I hadn't seen the Prada story until Joe mentioned it a little bit earlier on. Really strong numbers. It came out late in European trading yesterday, traded in Asia. Looks like that effect is rippling through here. So LVMH is on the upside. Ferrari's having a better day. Richemont is also tracking a little bit higher as well. So there may be some Prada effect in the market as well this morning.
Waiting to see what happens with the, Mondi paying a 33% premium for DS Smith. So obviously expect those shares to go higher, which is, interesting if you're following those companies, but also interesting as a theme to think about whether capital markets activity is showing some signs of life. It's not difficult for the MA function on the Bloomberg terminals to show, a pickup versus last year, because it was so weak last year if you're looking at M&A or if you're looking at IPOs. But if we did get that, what does that tell us about where we are in terms of the rate cycle? What does that tell us about the banking story as we go into 2024?
Yeah, I think the corporate story, and this is where the next, earnings cycle, because we're kind of wrapping up this time, really comes in handy. How many times do a lot of these corporates talk about, one, the geopolitical risks that Christine Lagarde has just spoken, but also weakness in the consumer, weakness in different parts of the economy and of the continent of Europe. Christine Lagarde actually addressed part of that in her comments yesterday as well. Take a listen to what she had to say.
The economy remains weak. Consumers continued to hold back on their spending, investment moderated, and companies exported less, reflecting a slowdown in external demand and some losses in competitiveness. However, surveys point to a gradual recovery over the course of this year.
Christine Lagarde giving us her thoughts then on when we get to that rate cut at the ECB. Let's tell you what else is coming up today, because we are, of course, digesting the ECB. We'll continue to do that. 9 a.m. UK time, ECB's Robert Holzmann speaks. I'm really interested in how he weighs in to the conversation that's been quite dovish in the last in the last day or so on the ECB front. How does Holzmann play? At 10 a.m. London time, Euro area fourth quarter final GDP. That data will hit 12 p.m. UK time. New York Fed President John Williams will be speaking. And of course, we build our way to the payrolls report. That's coming up at 1:30 London time. Let's bring into the conversation Morgane Delton, who is head of investment strategy for Europe at Global X and joins us on set this morning. Good morning to you, Morgane. Let's start with the US then. We're looking ahead to the payrolls report a little bit later on. How do you interpret what we've seen on payrolls? Do you think we've seen a little bit of a resurgence? Do you not believe the data? Are you somebody who looks for who wants to tell a different story with different data? Because some on the economic side do. What are you looking to take away from the jobs report today?
Well, we'll see if it's aligned with the ADP report we had earlier this week. So reading from the ADP report, we're seeing that the wage inflation is still running high. So I would say that given we have this anticipated data, I don't expect a massive surprise on the job report this afternoon with continued wage inflation. And also, I think we've still got decent number. 200,000 is quite a decent number.
Okay, so if the labour market remains as strong as that is, and I know there are people who see the cracks, but if it is as strong as that, is that weak enough for the Fed to be cutting this year?
Well, I think that the job market is really at record lows, and even if there are some cracks, it's still at very low level to really worry the Fed. What the Fed is most concerned about is other mandate on inflation, and at the moment inflation is very difficult to read. But from Powell's remarks on Wednesday during his testimony, I think what's really interesting in the next coming inflation report would be to look at certain items that is stressed as massively important for Americans' wealth, and in particular transportation services inflation that is running higher by 3 times in confrontation to its long-term average.
Morgane, good morning. Both Lagarde and Powell pointing to a June rate cut. If I think that's right, do I buy stocks? Do I continue to buy stocks? This rally just continues, particularly in the States. It gets higher and higher. What do you do? Is that a signal to continue, or is that a signal to maybe get out?
Well, if we take the biggest picture at the macro level, the US is doing very well. And I think a scenario of a V-shaped recovery in the US is more and more likely. So if I take this view, I would say that US equities look more attractive than, for example, Europe, where we've seen a slowdown in economic activity. So overall, I think the US is still a very, it is my favorite region to invest in.
Do you see, is there anything, we talk about markets climbing a wall of worry. I'm running out of things. The market appears to be running out of things to worry about. Is that a good thing or a bad thing?
What I take from market at the moment, and I think it's a bit counterintuitive, is the gold rally at the same time where we're seeing some decline in the US Treasury.
Yep.
And I think to your point here is, what is the market concerned about? Because usually if you anticipate lower borrowing costs, which is not a deal done yet in the US, it would favor some of the precious metals, but it's not the case yet. So is the market starting to have a little bit of risk off on certain area, maybe financial stability? We've seen a lot of statements around commercial real estate being of focus by central banks. So might be something to look at in the next few months, and maybe financial stability is taking over some economic risks.
There is an argument, Critty, that says that central banks are buying. So there's a lot of central bank buying potentially in the gold market, and they're signaling they're worried about inflation.
Yeah. Well, how much of that, though, isn't just an inflationary story, but also a geopolitical story? That was the part of what Lagarde spoke about yesterday kind of caught my eye, because it felt like a lot of these central bankers around the world haven't really been talking about geopolitical risk, and then it kind of seeped into her speech yesterday. How are you thinking about that? When do, if at all, the geopolitical risks kind of show up? I'm talking about the Red Sea, I'm talking about Gaza, Israel, et cetera, even Ukraine. Where in the data would that show up?
I think the most important data to look out for geopolitical risk is the outlook for oil prices, because at the moment oil prices are still high compared to their historical level, and that is cost inflation, that is cost push inflation, which is damaging for the European economy but also other economies elsewhere. So I think that is why it's so important for central bankers, and at this point Christine Lagarde made it quite clear that they will still self-inflict some of demand reductions in order to keep inflation on track. But that might change, and I think it was very interesting to hear her saying that actually we'll know more in June, as in maybe we'll know more when the Fed starts cutting interest rates.
So geopolitical risk is one piece of it. Consumer resilience, as we're talking about driving the inflationary story, is the other. Time and time again, we've been interviewed corporate CEOs, European corporate CEOs on this program, and time again, they've pointed to that American resilience story. Talk to us about the read-through into Europe there. When American consumer resilience snaps, how fast does Europe feel it?
Well, obviously, through exports, that could be one way to see a snowball effect from lower demand from the US. However, I think on the consumer side, it's more localized and really there is no much of a contagion risk. I think in Europe, what is at the moment a major focus economically, more than the consumer demand, is the outlook for Germany. And I think that is kind of the turning point for the ECB to be patient with self-inflicting demand reduction. If Germany becomes too at risk of recession, then the ECB might consider jumping in and cutting first.
Morgane, thank you very much. Thanks for joining us. Morgane Deldon, the head of investment strategy for Europe at Global X. We thank her for joining us this morning. Interesting, you raised the gold price. We talked about this a little bit earlier on this week, didn't we? New highs on gold. Some people talking about Bitcoin in the same conversation, others keeping them very carefully apart. But interesting on the gold side, there's another narrative. You talked about central bank buying. There's another narrative around the consideration that lawmakers are giving, and the US is pushing this, the UK on board, for thinking about confiscation of Russian assets and whether that undermines currency regimes, perhaps, to some degree, the dollar, the euro. Others say, no, that's overstated. Actually, that's not what's driving the gold price. But it's something that's being discussed, isn't it?
I think you can plug all of these things in and you get probably some effect. What I think is fascinating is that there is clearly something going on kind of below the surface that's very hard to discern, because ETF outflows are happening. So people are taking money out of gold ETFs, yet the gold price keeps rising.
They put them in Bitcoin ETFs?
Well, maybe, but the point is that the gold keeps rising, so somebody is still buying. So this feels like it's a central bank story.
Yeah.
What are the central banks worried about? Maybe, as you say, there's this kind of new use of the dollar as a geopolitical weapon, but there's also a central bank story. You can see what's happening with the chart there. There's also this central bank story that maybe they're sniffing out. There's this fear that inflation reemerges, and that's why they're buying their gold.
Yeah, the gold story is fascinating to me, because for so long when people were talking about gold, they were also talking about it from a where is the demand coming from. You talked about the central banks, but in January, February time frame, it should be coming from China. It should be coming from India in terms of physical demand, and that usually is the one that boosts the price. So it's interesting that during that exact same time frame that historically you're seeing the outperformance, the ETF is actually underperforming.
Yeah. So that's why I can't. That's why I think there are things going on that are hard to discern. I think there's some geopolitics. I think there's some central banks.
Yeah.
But it's interesting that it keeps going higher, and I can't put. And I think the market's struggling to put a finger on why exactly that is, given the outflows we're seeing.
Yeah, certainly caused some confusion this week. Let us tell you what's coming up on the programme. DS Smith surging after Mondi buys the packaging company for $6.5 billion. We will get more on your stocks on the move. That's coming up next. Not quite trading at the offer price, though. A little bit of execution risk perhaps in there, or something else. We'll get some analysis. This is Bloomberg.
there's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Next time on The Deal.
I realized a long time ago that being a football player or an athlete, you can get into a room, but once you get in the room, you have to prove that you belong there. But what keeps you in the room, right? It's your talent. It's the talent that a lot of people don't see or don't think you have because they've only seen you in one way. And for me, the biggest pivot was getting out of my own way, telling myself that I'm more than just a football player.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Day, and Bloomberg has the report under surveillance.
We've had unemployment sat at 4% for 2 consecutive years.
This is a two-sided sword.
There is a softening in labor demand.
Today, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
This is a very strong labor market.
The White House has got to love this.
This is something huge they want to run on.
Where is the slowdown?
If you look at the reality, it ain't showing that.
The February jobs report, today on Bloomberg.
60 minutes past the hour, 60 minutes into the session. Equity markets are doing nothing. We're waiting for the payroll number a little bit later on. I think I can say that today. Yields are a little bit lower. Danish yields are a little bit lower. I wonder if there's a connection between Danish yields and Novo Nordisk. I'm just going to put that one out there. The great line, though, comes this morning from Olli Rehn at the ECB, talking about this kind of debate about whether or not the ECB can move first. It can deliver a rate cut before the Fed. The ECB is not the Fed's, quote, 13th federal district.
So is that code for stop asking us if we can have independent monetary policy? We can, is the point he is making.
I mean, it's a lovely thought, and I feel like I'm going to
Pretty maintains that it is.
I'm going to get banned from Finland by saying that. But look, they're related. You can't have one without the other. You're seeing it in the data. You're seeing it in the fact that a lot. Again, I'm bringing it back to the corporate story. I'm bringing it back to the consumer story. So much of the European strength or resilience is a function of American resilience and American spending. If it's too hot there is a read-through, so I don't think they're independent stories.
Yeah, you only have to see the number of American tourists in Europe to witness that phenomenon, but that's only part of the story. But to your point, Chrissy, on the same day that we get that comment from Rehn, and we're talking about whether we get a cut from the ECB in April or in June, we then hear from the ECB's Muller, or just before that, in fact, saying optimism is returning to the Eurozone economy. So as if things haven't got confusing enough, there is an upside story on the Eurozone economy, perhaps being dragged up by the upside story over in the US.
I mean, you talked about, again, the consumer spending. Just talk about tourism for a second. Hint, hint, Spanish data. Hint, hint, Italian data as well. This is, I don't know. I don't think this is that crazy to say that the Fed matters for the ECB and that the ECB matters for the Fed. The Fed watches the BOJ, it watches the ECB, it watches central banks around the world. The Fed also is not only a U.S. story as much as they like to say it.
Italy, I've been digging around on Italy. Apparently there's a tax break on housing renovations that have had a massive impact on the Italian economy. I can't believe you set me up for this.
I know. It's working out so beautifully.
And that's going away.
Yeah.
So whether or not that translates into a significant rollover in the Italian economy, and whether post-Kriti Gupta's travels across Spain, we see the similar related rollover.
Maybe that offsets the weakness in Italy.
Every day I'm spending money directly into the Spanish economy. Yesterday I booked some a parking garage.
Excellent. Well done.
Every day.
Nice job.
You're welcome, Spain.
Yeah. The Spanish economy doesn't know what's going to hit it fairly soon, is my impression. Let's talk a little bit about what is happening with the stock story this morning. HelloFresh. Hello, this is a big move. Joe Easton, what's going on?
So I've just been told HelloFresh down around 40% at the moment. We haven't got that one on the screen at the moment, but we will flip it up after these ones here. HelloFresh dropping its 2025 guidance and also the 2024 numbers weaker than expected, according to analysts. That one getting absolutely slammed. It's a record drop. We'll have a look at these box companies because DS Smith, well, there we go. We'll do HelloFresh first. It doesn't matter because we've got HelloFresh down 42%. Doesn't get much worse than that, does it? I was a user during the pandemic. I'm one of the people that cancelled, and lots of people have, according to that statement today. We brought up Vivendi, earnings out of them, and slow progress on their plan to separate the company into 4 units. That was something they announced a while ago, and not making too much progress there. Earnings did look a bit better than expected. Grifols, though, absolutely rocketing today. Management buying shares. That's been disclosed to the Spanish Stock Exchange. Our reporters working on a story on that one. And we got BE Semi because this one hit hard over in Amsterdam. It's the worst performer. Traders are pointing to an article in Korean press about Samsung and Hynix changing the way they process some of their bonding in chips, in computer chips. All a bit complicated, but it is this report in Korean press that's hitting BE Semi, one of Samsung's biggest suppliers. So we'll flip over and have a look at some other ones on the screen. It was a bit of a messy open for those shares, but there's DS Smith. It's trading at 344. The bid price is 373. So we're not getting there at the moment. Execution risk, as Anna mentioned there. Potentially there are some conditions in that deal going forward, but Mondi coming down, £5 billion they're paying for that deal, so it is expensive for them. And we've called this board UK M&A because we got breaking news that another UK company is getting bought out. It's a company called Mattioli Woods, based in Leicester. They do pension consultancy, a £400 million offer from private equity, and that one is up 32% today. I think we're going to have a quick look at some luxury stocks. We mentioned the Prada move. They all opened higher, as you said, but they have come down a bit. Bear in mind, these stocks have had a good start to the year already, so potentially that positivity that we heard from Prada already priced into the market. But those shares are in focus following Prada's 18% rally in Hong Kong. And we've just got one morning call to bring you, and it's a big one. Morgan Stanley goes overweight UBS, the Swiss lender, and that one is rising 3%. Morgan Stanley predicts a rebound in UBS's investment banking business and says the stars are aligned for their wealth management unit as well. They expect them to ramp up dividend payments as the couple of years progress for them. So UBS up 3.4% as Morgan Stanley recommends buying.
All right, Joe Easton from our equities team, we thank you so much for walking us through some of those stories. So when we're looking at the trade this morning, Anna and Guy, it's a little bit of a nothing burger.
We're waiting for payrolls, aren't we?
Yeah.
That's effectively what we're looking at here. You've got 2 big numbers coming up over the next few days. You've got a weekend coming up.
Yeah.
Do you want to put risk onto the table before you see that payroll number? I think a lot of people are just sitting on their hands this morning.
Yeah. I have nothing to add.
There we go.
Guy with the final word. He's done. Can I just point out that Joe actually pointed out to a couple of buyback stories as well? Just feel like I need
There's
to have
a nice story on buybacks and how European results have under-delivered this corporate reporting season, but the buybacks have effectively saved the narrative, which is the narrative that you picked up on right from the get-go.
Thank you for the due credit. I was going to say that sounds very familiar. I wonder if that has my name on it. But anyways, let's talk about another major corporate story that we're watching. Of course, Klarna, we're talking about the consumer. We're talking about this AI story. We'll marry the two together with an exclusive interview with Klarna. Our very own Tom McKenzie spoke to the CEO. Take a listen to what he had to say.
I sincerely believe that if you look already 12 months from now, you're going to see what we may refer to as AI tigers or something like that, or maybe just AI companies. But what we're going to see is companies that have really ingrained AI at the core of their business. They will move much faster. They will have higher revenue per employee. They will be more agile, more fast-moving.
Let's get right to Bloomberg's Tom McKenzie, of course, conducted that exclusive interview with the CEO and co-founder of Klarna there. Tom, the AI story is fascinating. You've been covering it from a multitude of angles. But to me, I love that part of the interview where he actually compared how he's viewing AI with how he viewed Bitcoin, about whether it has this longevity story. He says it does, but how do you apply that to a buy now, pay later kind of company?
Yeah, absolutely. And of course, he caused waves when he said that they were using a chatbot. They've been working with OpenAI, and that was doing the work of 700 employees. So look, they're leaning into AI very strongly indeed. And for the context, look, I'm at their headquarters here in Stockholm. This is a company that's trying to get back to profitability. They've been unprofitable for the last few years. They started off profitable as a business. They're unprofitable now. They had their first quarter of profitability. They were profitable in the US. They saw gross merchandise values last year, 2023, up 17%. Interesting, in terms of credit losses, actually coming in at 0.4%, just 0.4%. So credit losses are actually coming down for this business. AI is going to be an efficiency play for them, clearly. He didn't want to give me numbers in terms of what this could mean for headcount, but he envisaged a future where you will have an AI digital assistant. You wake up in the morning, that assistant will be there giving you financial advice and helping you reshift your portfolio, whether that's credit cards or loans or savings. And by the way, they offer these products now in terms of credit cards, loans. They are a fully licensed bank. He wants to get to the point where they're the first fully licensed full true play AI bank as well, he told me. So we're a ways away from that, but clearly AI is central to this CEO's thinking at a time when it seems like, by the way, the consumer is holding up okay.
Well, let's talk about the consumer. What data are they seeing on what is happening with the consumer? These guys must have some fantastic numbers to tell us about in order to get a steer on what is going on with the consumer on either side of the Atlantic.
So I was just on a call to their team. They're saying they're going through right now the Black Friday sales numbers. And interestingly, what they're seeing are their users actually paying off the debt that they accrue through Klarna sooner than they have done historically. In fact, 50% have paid off early. Really interesting. And in terms of those credit losses, again, 0.4% across the portfolio for Klarna, that's actually come down. So they're seeing a relatively resilient user base so far. Interestingly, though, as well, in terms of the order values that's coming through from their users, that has stayed the same, but within that basket, more products. So it seems like they are shifting down, buying more cheaper products, but keeping the overall basket the same. And again, you said absolutely right, the US market is key to them. They managed to turn profitable last year, but it seems like people like you guys are shifting from your Gucci slippers. Instead of buying one pair, you're buying 10 pairs of Crocs.
You know me so well, Tom. love a pair of Crocs. Tom McKenzie joining us from Stockholm. Fantastic interview. 50%. That number's quite high. That tells you a story of a strong consumer. Anyway, Joe Biden was certainly talking about a strong economy last night. We're going to have more on the State of the Union next. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in. I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
You never hear people saying, I want my little boy to grow up to be an insurance person. Did your parents tell you to be in the insurance world?
I really liked the insurance sector at the time. We are basically promoting and ensuring social cohesion. And at the time, I wanted to make a difference and wanted to go in there.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Europe's eastern flank, the debate is back, this time to fund defense.
Trump!
As US support for Ukraine falters and NATO skeptic Donald Trump could regain the White House, Europe faces the possibility of going at it alone. France's Emmanuel Macron and other EU officials have already signaled support to pay for defense spending with jointly issued bonds.
I don't see any reason not to continue for common targets to have common funding.
How much is in play? Well, Estonia's Prime Minister has called for 100 billion euros to be issued. But there is also opposition. Germany's finance minister is among those to reject the idea. One group decidedly in favour: investors. The first auction under the EU's COVID recovery programme back in October 2020 recorded the largest order book ever for a single deal, in part because it's AAA rated, so very safe, and carries a higher yield than not only German debt, but also French. So the market is thirsty for more. And 2 years into the war, the urgency is increasing for European leaders to fund defense priorities, with joint borrowing back on the table.
Max Ramsey there. Europe's joint defense got a boost yesterday with Sweden formally joining NATO. U.S. President Joe Biden using his State of the Union address overnight to deliver a fairly strong message to Russian President Vladimir Putin.
And today, we've made NATO stronger than ever. We welcomed Finland to the alliance last year. And just this morning, Sweden officially joined, and their minister is here tonight. We're going to stand up. Welcome. They know how to fight. If the United States walks away, it will put Ukraine at risk. Europe is at risk. The free world will be at risk, emboldening others to do what they wish to do us harm. My message to President Putin, who I've known for a long time, is simple. We will not walk away.
Joining us now for a little bit more context, Leslie Vinjamuri, Director of the U.S. and America's program over at Chatham House, joins us. Leslie, a pleasure to have you on the program. Let's talk about the State of the Union. Foreign policy, really a hallmark of this address at a time when usually they have more domestic-leaning kind of policies. Why now? Why did Joe Biden lean into this piece of the equation?
He really did. And of course, he linked it, right? It was foreign policy as a lead, but it was about defending democracy. And he very, I think, cleverly linked first defending democracy in Europe, defending Ukraine, and then he turned to America and the assault on democracy domestically. And so that sort of leading with values, calling on Republicans to pass the supplemental bill so that Ukraine can continue to be defended, and saying very clearly that anybody who thinks that Vladimir Putin intends to stop with Ukraine is simply wrong. I mean, it was very unambiguous in terms of his views on where this leads. It was a very powerful speech. I think that, you know, different from a traditional State of the Union. He didn't use Donald Trump's name, but he referred to his predecessor and quite intensely attacked him on multiple occasions for bringing America into a place that didn't stand up to the values that Biden asserted. The other thing that really stood out to me was the focus, of course, on working class Americans, on middle class Americans, saying that nobody earning under $400,000 will pay more taxes, but making it very clear that he intends to increase taxes for wealthier Americans, for corporate America. And that's obviously, you know, something that really differentiates this president from Donald Trump, his likely economic agenda. So he was drawing a very clear lines. But that, as you've said, that start with foreign policy. He also talked about the war in the Middle East.
Yeah.
Quite a bit later on, he really leads with Ukraine, talks about NATO. The Swedish prime minister was there on a day when, you know, Sweden formally joins NATO. But again, a very powerful speech. He clearly worked on this.
Yeah.
And was determined to show that he has the energy to continue to lead at a time when many people very clearly are concerned about his age.
Yeah, and Leslie, you brought up the point that he did bring up the Middle East later, really perhaps leaning into the fact that he's under quite a little bit of domestic pressure when it comes to his foreign policy around the humanitarian aid in Gaza. But Leslie, you brought up a good point about the economic agenda, because the tax cuts that are potentially put out for President Trump, President Biden taking a very different stance and as well framing him as the anti-Trump candidate. We have a budget proposal due on Monday coming from the Biden administration where about 1% of a cut is expected in defense spending. Is that something to worry about, given the fact that he's leaning into this foreign policy agenda so much, but not able to deliver more aid to Ukraine, only humanitarian aid to Gaza, and now cutting back on defense spending as well?
Yeah, I mean, this is a complicated story. First of all, as we know, President Biden would like to deliver more aid to Ukraine. The Senate has passed a bill, and this is all about the Speaker of the House not agreeing to allow people to vote. If there was a vote, it would pass. There would be U.S. support for continued support for Ukraine. That's pretty clear. On the defense spending, yes, there are a lot of people that are making a very powerful case that the U.S. needs to spend more. But I think the real question is less that number, which is, as we know, very high, even if there was a cut. It's about how you spend it. It's about modernization. And this is where I think the focus really needs to be. It really is a question of where that money goes and how it is used to modernize America's defense and military priorities so that it can compete, quite frankly, with China and in the Indo-Pacific. It's something that's been very difficult for this president to do, despite it being top of his agenda because of these two major international wars.
Leslie, the president clearly looks like he's changing tack when it comes to Israel, or has been over the last few weeks changing tack when it comes to Israel. Cree's been talking about this morning. We now have a situation where potentially he is going to be taking another step forward. He is going to be building a pier which is going to allow aid to be directly delivered into Gaza. How does that impact domestic politics? How do you think that is going to reflect in the United States in places like Michigan?
I think it's important, but it's going to take a lot of time, and the situation right now is urgent, and people know that it's urgent. Certainly those individuals who felt passionately enough about this issue to turn up in a primary and vote as non-committed voters in a Democratic primary. In other words, to really register their concern, their frustration, and their opposition to the president's policy when it comes to Israel and Hamas and Gaza. So I think it's important, but there are just simply many people who will feel it is too little, too late, too slow for children and women that are suffering.
Listening last night to what the president had to say and thinking about the primary process we have just been through, how has Nikki Haley changed the dynamic in this election? How has she opened potentially avenues of attack for the president when it comes to Donald Trump and the Republican Party? How much clarity has she given in terms of those that are either in the center or closer to the center than maybe those that are the base that form Donald Trump's kind of key voting constituency?
Yeah, she's made it clear what we all know, which is that Donald Trump does extremely well with his base, but that there are many Republicans who don't support President Trump. It's never a headline story. We all like to talk about how much support, surprisingly to many people, the former president has. But if you look closely at those numbers, I mean, Virginia is a very interesting state. The polls suggested that on Super Tuesday, Donald Trump would have a 60 percentage point lead on Nikki Haley, and he simply didn't. It was about half of that. There are many independents, there are many Republican-leaning independents, and there are many Republicans, many of them wealthy, some of them likely to be the suburban women who, both sides are fighting for that vote, who don't support the former president's foreign policy, who are put off by his style, who remember what happened on January 6th, who don't want to return to that style of governance. And that is what we've all known is a problem for the former president as he looks at a general election, which is still many months away. And when you return again to the State of the Union last night, we've seen that President Biden is going to draw on that message. He's going to remind Americans of what those years were like in an effort to try and diffuse the critiques of him, which are, about the Middle East policy, about his age. And again, he's also trying to remind Americans that the economics of the United States are, in global terms, very, very strong. And the question, I guess, is whether those effects will be felt by working class Americans in time for the election, in time for the current president to feel that benefit.
And Anna, that's a very crucial point that she makes as well about the bipartisan story and the fact that Joe Biden actually mentioned that, the power of the party in not even able to getting some of those bipartisan border deal as well. It's a crucial piece of the equation that Chatham House's Leslie Vinjamori brought up as well. We thank her so much for joining the program. And again, look forward to having her throughout the rest of this election story. Coming up on the program, women taking on the big take. We're going to discuss the female regulators leading the charge on Europe's data enforcement. More on the story next. This is Bloomberg.
What are you most worried about in the global economy now? Is it the geopolitical environment, U.S.-China, Ukraine? Is it inability to pass the debt limit extension? What are you most worried about?
I think most of the time I would answer the same way, a financial crisis. As a human, I worry a lot about the Chinese invading Taiwan and World War III coming on. But in that case, I don't think whether you invest with David Rubenstein or Cliff Asins is the really big issue. So I think a financial crisis I worry about for because they're very unpredictable. After the fact, everyone predicted them. But before the fact, they're not very predictable. I don't think anyone wants a financial crisis. You think you'll do well, and something happens that boomerangs, and you don't.
Well, as we talk, we've seen Silicon Valley Bank basically go under and have to be bought. And there are other banks that have some challenges. Are you worried about a banking crisis or not so much?
Worried enough to put it on my worry list. I have no special knowledge of banks, commercial real estate and banks that deal in that, maybe a more nerve-wracking place, how that shakes out in cities. So, yeah, those things worry me, but not especially more. I think even before SVB, I would have said financial crisis is a very low probability. When someone says their biggest worry, doesn't mean they think it's likely. It means they think it's possible and would be terrible.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
This is Markets Today. Welcome back, everybody. We are 44 minutes into our European trading day that is reflecting a wait-and-see approach, really, because we've got key data out of the United States later on. We'll get to that shortly, but European stocks are pretty flat, up 0.1% on Stoxx 600 right now. Now, let's pivot our attention to something else. More than half of the authorities tasked with enforcing Europe's data rules are led by women, with sweeping new EU tech regulations now in effect. Their roles as watchdogs may expand even further. Why are we drawing this to your attention? Well, because, of course, it is International Women's Day, and so we thought focus appropriately on this story. Bloomberg's Stephanie Bodoni has been writing about this for us and joins us now. Stephanie, very good to have you with us. So Europe seems to have become a bit of a role model in making sure people's data is protected, certainly taking quite a hard line on tech, and a lot of women leading the charge on this front.
Absolutely. I mean, Europe has quite strong data protection rules in force since almost 6 years, And over the last 10 years, you've seen a growing number of women being propelled on top of some of these watchdogs. You have about 30 European watchdogs who are empowered to enforce the well-known GDPR rules, which can lead to fines of almost 4% of a company's annual turnover. One of the most famous names over the past 10 years has been Helen Dixon, who was, until last month, the head of the Irish data protection regulator. Why has she become a household name to many people? Well, a lot of the US big tech firms have an EU base in Ireland, and that has propelled her overnight, basically, with GDPR into almost the EU's main tech enforcer. Now, this has not always made her big friends, and she's been the subject of a lot of criticism, sometimes even being told she's too slow, too soft, or in cahoots with companies. But over her 10 years, she's levied about 2.8 billion euros in fines, which is something that was unheard of before GDPR came into force.
Walk us through some of the challenges, the biggest challenges that these regulators face when it comes to trying to make these really big calls and fines on a sector that is notably and famously very male-dominated.
I mean, for women, I think I spoke to Helen Dixon as she was about to leave her regulator in January, and I asked her this: do you think that you faced a harder time over the past 10 years because you're a woman? I mean, she has been the brunt of a lot of criticism, but she said, I don't think that would be right to say. I mean, her predecessor was a man, and they had some criticism too. But she does say that women generally in leading public positions do face a harder time, maybe on social media and other public spheres. I mean, it's we live in a world where everything is exposed that you do these days. And she did acknowledge that this is something that women in the public sphere do face a harder time doing. I mean, especially a lot of the critics that she's faced over the years were men. So I do think there's some role here.
Is the conclusion from Europe, though, that women actually make better regulators in the tech space. That seems to be the conclusion that I think a lot of people are increasingly coming to. Or is this just an accident? Are they there? I'm wondering what we can draw from the fact that there are so many female regulators and they are doing such an important job and having such a big impact. Can I draw a conclusion between one and the other?
Well, I'm a woman myself, so I'm a bit biased. But it's true that when you look at the world beyond data protection, if you look at the antitrust world, the three main regulators there in the US, in the UK, and in the EU at the moment are led by women. Margrethe Vestager in the EU is obviously the most famous name, and she's made her mark not just once but twice this week as well, levying a huge fine against Apple on Monday. And then the well-known DMA, a new digital rule, came into force yesterday, which will empower her and her successor even further. I don't know. I mean, Helen Dixon in Ireland, so by now has been replaced by two men. So she, as I said, she left her job last month, and she's already been replaced by two men. A third person is being hired to replace her. So one woman being replaced by two or three men is maybe a nice image to see what it's for me. But we'll see who the successor of Margrethe Vestager will be. I mean, her term is running out at the end of this year with new EU elections and a new European Commission coming in. Will the new competition commissioner be again a woman or a man? So we will see how this will all play out going forward. But it's true that the world of tech regulation is only growing and expanding with new EU digital rules having come into force with the DMA, DSA, on top of GDPR, and more rules coming in AI. So more challenges coming our way, and we'll see if it's all women.
All right, Bloomberg's Stephanie Bodoni, we thank you so much for bringing us that crucial reporting. I want to stick with that same theme as British lawmakers now warning that banks and financial firms should be banned from using non-disclosure agreements in workplace sexual harassment disputes. They say they risk silencing victims while protecting the perpetrators. Let's get more from Bloomberg's Caroline Hepker. Caroline, this is the now second report in 5 years on sexism in the city. Are things getting better?
Unfortunately, the answer seems to be no. That's the conclusion from the Treasury Select Committee's report. This is a group of MPs. They spent about a year taking testimony, including behind closed doors and anonymously, about the financial services industry in the UK. Harriet Baldwin, who's the chair of that Select Committee, spoke to me at length yesterday. She's talked about change taking place at a snail's pace. And in fact, the progress has been incredibly slow. They did make this recommendation about non-disclosure agreements, that they shouldn't be used in the case of sexual harassment cases, and they want legislation to be brought by the government there. They've also made a series of other recommendations, including things like increasing the gender pay reporting rules down from firms with 250 employees to 50 employees, also getting rid of things like asking for people's salary history, actually publishing pay bands, things like this. But I think really pretty dismal, and Harriet Baldwin told me that she was very disappointed at how little progress has been made.
Right, so what is it that you've listed some of the things that MPs want to see change there, Caroline? It's interesting that some of the things you just mentioned tie in with an EU directive that comes in 26, 27, that will make some of those things law across much of the European Union. Of course, the UK not in the EU, so coming up with its own proposals.
Yeah, it is. But I thought that the emphasis from Harriet Baldwin, which was placed on the leadership of businesses, was actually the key thing to take away from that. Although the report talks about how the reporting and the data collection has been very important in making the little progress that we've seen, her emphasis was actually that it is the responsibility of boards, and that she wanted to see more action there, which I thought was a bit contradictory, but that was her view. And she also said that the issue was a bit greater and more severe for smaller organisations, things like hedge funds. She seemed to be more worried about boutique firms, as she called them.
That's the narrative here. I see headline after headline, day after day now, that suggests that actually finance is walking in the opposite direction. the diversity and inclusion, I don't know if this is in advance of what is happening with the potential Donald Trump presidency, but diversity and inclusion seems to be taking more and more of a back seat rather than a front seat.
Oh, no, absolutely. I put that point to Harriet Baldwin, the fact that actually some investors in the United States are clearly pushing against DEI initiatives. Her view was that it is an existential threat to companies if they don't have greater diversity. She also referenced various studies, including one from BlackRock, about how there are commercial benefits if you do that. I pushed back hard on that, and she cited as an example Crispin Odey and that case there as a reason why firms could unravel, in her view, if they don't get it right on this topic. But yeah, we did ask her that question on that very issue about whether there is a cultural pushback here.
Yeah, Caroline, great reporting. Thank you very much indeed, Caroline Hepker, joining us on what is happening here in the UK. Let's talk about what's happening for the rest of today. This is what the day book looks like. Clearly, we're all building up basically to the payroll number, which is going to come a little bit later on. That certainly is going to be the focus, but there's plenty to get through between now and then. Anna's very interesting in what Mr. Holtzman has to say.
I just think it's great. We've had so many ECB speakers, as you often do, the day after the ECB meeting, and a lot of them seem to be falling into line with the broad, maybe April, more likely June vibe. Some of them keeping their options open around April and June. I just wonder, how much is he prepared to sort of fall in line on that front?
Nagel has, which I think is interesting. So the Bundesbank feels like it's on board. It is International Women's Day. I think we should talk about the most influential, powerful woman on the planet, which of course is Taylor Swift.
I thought you were talking about Christine Lagarde. We were still talking about the ECB.
Taylor Swift.
But no, we're going somewhere else.
There are plenty to choose from. Go ahead. To our Taylor Swift correspondent.
You've got the Ray Dalio story. Economists in Singapore are upgrading their economic forecasts because of the Taylor Swift effect. The fact that the Eras tour has come. You've seen it in America.
And we don't think this is just for clicks, Guy. By the economists, I mean.
By the maybe, but there is a lot of evidence, discernible evidence, that you look at what is happening in the consumer story in the States.
Yeah.
She was just emblematic of that story, that people just want to go out and enjoy themselves and spend money and socialize. And people are flying around the world to experience the Eras concerts.
Yeah, speaking of some of those people, let's talk about Ray Dalio, because he was one of them, actually tweeting it, not only saying that he was there and he loved how it brought Americans together. He says this in his tweet, which I believe we're showing at the moment, but also talking about T Swift for president. How
that would certainly shake up.
Timing.
That would certainly shake up the run to 2024 in November.
Well, if Taylor Swift does run for president, are you going to be her vice presidential candidate? It feels only appropriate.
I'm not sure. I'm not sure I qualify by birth for that particular one. But yeah, I wonder who she would select.
Yeah.
As a vice president.
From correspondent to potential VP or wannabe VP.
Wannabe VP. Yeah, wannabe. But it's International Women's Day. The impact that she is having around the world is absolutely epic in terms of the economic performance. And the Eras tour, the movie's coming, that's having a big effect on Disney as well.
Yes, this is supposed to be a big boost for it. We're talking about the economic story. I mean, look, we're joking here, but this does actually have a big economic read-through. This is inflationary around the world, and it's not just her, it's indicative of how much people want to spend on disposable income at a time when jobs are still hot, and they might still be today.
And we've had some pretty strong indicators around the US economy, at least on the sort of anecdotal level, the likes of the Klarna conversation earlier. That is it for markets today. Markets doing not much, waiting for the jobs report. The Pulse is up next. This is Big Back.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He was a day trader. He taught himself Self-made day trader.
Yes.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. U.S. President Joe Biden lays out his pitch for a second term as he takes aim at Donald Trump in his State of the Union address and unveils plans to boost humanitarian assistance in Gaza. The Fed Chair Jay Powell signals the central bank is getting closer to the confidence needed to cut rates. The focus now shifts to U.S. jobs data out later today. Plus, a Bloomberg experiment finds ChatGPT produces racial biases against job candidates based on their names alone. We'll speak to a pioneer in uncovering bias in AI. And of course, as we celebrate International Women's Day, we'll be joined by a pretty stellar lineup of leading women from the world of economics, tech, space exploration, and art. Now, first thing is first, so let's take a look at the European markets map. Again, a lot of what we've seen overall driving these markets has been what we heard from Jay Powell yesterday. Again, signaling that there is a little bit more confidence from Fed officials to start cutting rates. The big data point will be jobs a little bit later today. I'm also looking, for example, at expectations from the Bank of Japan, which continues to support yen. You can see the FTSE down 0.2%. Now, to talk about the world economy, to talk about the U.S., and much more, I'm joined by a world-winning economist and author, Dambisa Moyo. Dambisa, as always, thank you so much for being with us. I'm especially grateful that you come actually on International Women's Day. When you look at the U.S. economy, it's firing on all cylinders, and this is productivity, jobs, growth. Is there something that makes you worry that in the next couple of quarters it goes south?
Well, I think the big metric is where is inflation going? And until we get to 2%, I think that the general consensus is that we're not there yet. And I think that's really expressed in the views that came out from Jay Powell, and we'll hear more of that. Obviously, we're all waiting to see the jobs report to see whether there's more pressure on the economy and to see in which direction. I mean, I think what's really interesting right now is that interest rates are interesting again. And I just published an article with the Investment Wealth Monitor talking about this. I mean, the macro environment is so interesting because, you know, on the one hand, we were expecting 3, maybe 4 cuts in rates, but we've seen it be a bit sticky as we turned into the 2% goal. And I think that's really what's going to be a very important metric.
But Debbie, I mean, this is like, you know, the kind of winner takes all. The concern is that if monetary policy is lagging by so much, then you could see a big crunch point in like 5-6 months. So are you of the view that it takes that the last mile in trying to get inflation down to 2% is the most difficult?
Yes. I am, absolutely. And I'm very fortunate. I've been going to Jackson Hole for the Fed meeting in August for the past 10 years. And I remember 2013 talking about the taper, but looking at where we are today, it's exactly right. The last mile is incredibly difficult, especially with so many geopolitical and macroeconomic factors that are exogenous to the sort of macroeconomic numbers that we talk about very often. We still don't know where we're going to settle on Israel-Gaza with the ceasefire. We don't know what's happening with Ukraine, Russia, and obviously those types of decisions are being made, around the Fed rates path are being made with that environment still very much in the backdrop.
So, Debbie, what worries you the most about what we're living through? As you say, I mean, you mentioned geopolitics. There's, extreme concern about polarizing societies. The market goes up, but then we also have different market signals with like Bitcoin and gold.
Yes. Oh, my goodness. 69,000 Bitcoin. My eyes popped out. So, look, I think what worries me most is growth. We can't lose that growth narrative and that growth story. And there's always a temptation, whether I'm in the House of Lords or on corporate boards, we're getting dragged into talking about the here and now. And it's critically important to make sure we navigate these choppy waters, whether it's because of macro, like inflation, or geopolitics. But I do worry a lot that, we have to continue to remind people of the importance of the North Star. And so, yes, we're all interested. Is it going to be a June cut? What's going to happen with rates? But we can't lose sight of the growth narrative and what is being done today to make sure that in the next 3-5 years we have growth. And right now, if you look at the World Bank and IMF trackers and some of the forecasts, we still have very weak growth on the horizon.
Yeah, and a lot of concerns actually about the UK and what kind of growth model they should be looking at. You sit on the House of Lords. How do you see the blueprint of the UK getting out of this rut?
Well, look, what I think is particularly interesting is we have an election this year. As you know, almost half of the world is going to elections. And, really when you drill down, it's not entirely clear to me that there's a massive delta between what the incumbent Tory government is doing and proposing and what, a Labour government would do and propose. Certainly not for the next 2 to 3, maybe even 4 years. And so in that regard, that really reminds us of how difficult it is to get into a growth story. There's a lot of stuff overhang of the debt and the deficits and concerns about inflation. We all know about that. But I just think that there's not much of a difference between ultimately what the Tory government can do vis-a-vis a potential Labour government.
So is it always going to be actually U.S. supremacy? Even the productivity numbers, right, in the U.S., is it difficult to have another economy that kind of counters the U.S. given?
Well, it shouldn't be the case. But, look, there are opportunities harder to find in Europe and in the UK, I'm afraid to say, for a whole host of reasons, regulatory burden. There's, we are net takers, as a relatively small economy in the UK. But the US story, it's lower hanging fruit. And as you say, it's where there's productivity gains, there are jobs numbers, thinking about technology. The sectors that are powering that economy are so much more obvious. And even though the United States does still suffer from debt and deficits, we've seen the Congressional Budget Office forecast, there's still a lot of worry on that. It is the reserve currency. And so it's netting out with people willing to give the U.S. a more wide berth. So the home bias, I think, I'm afraid it does seem to be very much for the U.S. market.
Debbie, you also sit on a number of big boards. Is there a huge difference between the way economists and politicians or policymakers see the world and the pressures actually of corporates going forward?
Yes. So I think corporates in general, and this is a very well-known story of the challenge of short-termism and, quarterly reporting, et cetera. If you think about the challenges that we face on a very macro level, aside from economic growth and generating economic growth, we still have to think about what does AI do in terms of top line, in terms of the bottom line? Is it going to change business models? But we also think about climate and how we're going to adopt and really alter the path of the transition so that the world ends up in a better equilibrium. Those kind of things are long-term challenges, and I think very often corporations in particular, but more and more politics as well, are being forced to deal with the short term, the here and now, when we all know that these are very structural problems that require long-term thinking, investment today, but really the returns might not show up for several years.
Dambisa, thank you so much. We'll talk a lot more about this and some of the challenges, of course, that the corporates face. Dambisa Moyo from the House of Lords, economist, author, and of course, he sits on many boards. We'll have more market insights. We'll also talk about some of the challenges on some of these boards. Plenty more ahead. Stay with us. This is Bloomberg.
Names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to create index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
Next time on The Deal.
I realized a long time ago that being a football player or an athlete, you can get into a room, but once you get in the room, you have to prove that you belong there. But what keeps you in the room, right? It's your talent. It's the talent that a lot of people don't see or don't think you have because they've only seen you in one way. And for me, the biggest pivot was getting out of my own way, telling myself that I'm more than just a football player.
Well, still with us from the House of Lords, economist, author, and of course he sits on many boards, Dambisa Moyo. Dambisa, thank you so much for staying with us. I mean, what's probably changed everything for various reasons, including structural ones in the last couple of years, is that the cost of money and the cost of credit has been going up. How does that shape the questions and thinking on board levels?
Yes. So someone once told me when I joined my first board about 15 years ago that revenue solves a lot of problems. And I think that that still applies today. In a world of relatively costless or cheap money, businesses, but also governments can do a lot of innovative things, things that are sort of more, moonshots even. And whether that's on social policy or in real innovation and technology, there's a lot more latitude. Obviously, in an environment in which we find ourselves, not just in terms of a higher cost of capital, but much more uncertainty about where the world is going geopolitically and with respect to AI, with respect to climate change. All these things mean that we have to be much more on the defensive with respect to how we use the marginal dollar. And obviously that affects a lot of the strategic decisions that companies are picking up on, but also the changes in terms of operations of how businesses are operating and also just thinking about long-term in terms of how they think about running these corporations over the long term.
Does it mean, Dambisa, that at board level, a lot of the conversations are actually on supply chains, on investment, future investment, some of the crisis points instead of inclusion and diversity?
Well, I don't think that there's a dichotomy between these things. I think we've all been convinced, hopefully, that diversity should be a net positive for businesses. I think what has happened in a higher cost environment is that we're much sharper about how we make that transition from very laudable goals of we want more diversity into how it's actually impacting the bottom line. And that is something that businesses would always do. And so I think it's actually good for us to be able to have a more direct line and thinking about compensation, thinking about hiring, thinking about promotion. How do we actually do that in a much more cost-constrained environment, and also think about still being able to pursue these goals around diversity and inclusion?
I mean, this is kind of a joke, but it seems like, the two things supporting the U.S. economy, Taylor Swift and NVIDIA. I mean, how does that, shape the conversations around the table when it comes to AI?
Look, I think AI, and I've spoken about this and many others have also, from my personal senses, it's too early to tell. I mean, I think there's a lot of, you can't ignore the fact that we have a $2 trillion economy that seems to have come from nowhere, though Jensen Huang always says it's been around for 20 years. But, the fact of the matter is, from a public policy standpoint, we need to think about whether that's going to be, net positive for jobs, or how should we be thinking about navigating jobs. For businesses, it's about the business model change. It's not just about, is it going to grow more revenues and cut more costs? It's also about, does this fundamentally change business models? And I think those questions are absolutely being debated, certainly in the boardrooms in which I serve. But at the same time, you can't be so fast to throw a ton of capital at something without there being full of visibility on where it might land.
Dambisa, in 20 seconds, what are you most optimistic about on the world economy?
I mean, most optimistic technology. I mean, not just this ability to alter consumerism and it cuts expenses and increase productivity, but what it could do for public goods. The delivery of education and healthcare, I think, could be transformative for, we have 1.5 billion people with no access to energy on a sustained, clean basis. We have a lot of people still out of school, still out of work. I just think the transparency that comes from AI, promises of AI and technology are enormous, and we should be excited about that, recognizing that there are state actors and there are also challenges that need to be managed.
So interesting. Dambisa, thank you so much for joining us today. That was Dambisa Moyo, of course, economist, author from the House of Lords and on many boards. Coming up, we also speak with Joy Buolamwini, who's been at the forefront of uncovering racial and gender biases in AI. That's coming up next, and this is Bloomberg.
There's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of it.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
Technology to produce an advanced chip in China last year. The Shanghai-based SMIC used gear from California-based companies to manufacture an advanced 7-nanometer chip. Now, the previously unreported information suggests that China still cannot entirely replace certain foreign components and equipment required for cutting-edge products like semiconductors. And Congress is moving closer to force
from the UK, and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I developed the all-in-one. The idea is you pressurize the handle, the gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
Power that say we don't want to regulate anything too soon because you could stifle creativity, but there should also be laws to protect some of these biases.
Yeah, so my view when it comes to regulating these types of technologies is really the precautionary principle. So if the technology is being used in a high stakes environment or high stakes application, so someone's getting hired or fired employment, if you receive life-saving healthcare, right, in those sorts of areas, we absolutely have to say, if we do not have evidence that the technology is not perpetuating discrimination, is not propagating harms. Precautionary principle means we don't use it yet. I think another really important area to consider when talking about regulations are the definitions that are being used. Because as the technology evolves, right, once you're hearing about predictive AI, now you're hearing about generative AI, all of these ways in which the terminology evolves, it's really important that we focus on regulating and legislating specific applications and not just the technology itself. So for example, if we're thinking about the risk that comes with surveillance or biometric surveillance technologies, you want to regulate that all together versus saying we're just going to look at facial recognition technology, because the next day, now we're analyzing the way people walk, and then you can use that for biometric surveillance. So if you're so narrow on the technical definition, then the regulations don't keep up pace. If you actually broaden it to how is this technology being used? Is this AI technology being used in mission critical critical areas. Is this technology being used in a way that governs opportunity or could run afoul with anti-discrimination law? Then you're actually able to put in protections that can last for a longer time.
Dr. Joy, are you worried that a lot of course, these new technologies put the technology before the human? And we've seen certain cases in the UK and elsewhere where even whistleblowers were not listened to because there's a belief that actually anything that's technological progress must be right and must be better.
We're absolutely seeing this, and I think it's so important that we don't accept digital discrimination and digital dehumanization as the tax for innovation. It is actually possible to be innovative while being responsible. And I think it is up to regulators and also up to everyday people to put pressure on companies to say this is not acceptable within society. Because absent those sorts of guardrails, we do have a wild, wild west. And without deterrence, companies will continue to push to see how far they can go.
I mean, you have a wonderful book out, Unmasking AI. What is the one thing through your research and speaking to people that surprised you the most that people don't know about AI today?
I think one thing that surprised me the most in doing the research is this assumption that nothing can be done, right? And so this overwhelm that the technology is made by these huge companies, a lot of really smart people are working on these systems. And so as an individual, my story doesn't matter. What my book and my own journey shows me is it's so important to share our experiences with AI. So I like to say, if you have a face, you have a place in the conversation about AI. So my story of being a graduate student, coding in a white mask, and that experience of hiding my own face in order for a machine to detect me is what led to this research on AI bias and what led to the documentary Coded Bias on Netflix and the book and other types of things. But it started with the importance of sharing your story. And so that might seem small, it might seem insignificant, but that's one of the biggest things that I've learned, because when we're talking about the limitations, when we're talking about what's going wrong, that gives us the opportunity to actually push forward for the benefits of AI. Absent that, we're going to have such a huge backlash when people see the ways in which AI is harming them in everyday life, that the promises of what this technology can deliver will actually be stifled.
Dr. Joy, thank you so much for joining us.
Thank you so much for having me.
Well, that was Joy Buolamwini, founder of the Algorithm Justice League and author of Unmasking AI. Now, it is a big markets day. We did hear from Jay Powell after 2 days of testimony saying that the Fed officials are probably being a little bit more confident about the ability to cut interest rates. The other thing we need to watch out for is, of course, U.S. jobs. And we've also seen expectations that the Bank of Japan will raise rates supporting yen. Coming up, we talk to the European firm that's trying to rival SpaceX, the rocket scientist and chief executive of the exploration company. Hélène Huby joins us to discuss the future of the space race. That's next, and this is Bloomberg.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production,
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
History is one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
So, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
My general advice is continue to seek out companies or people that are maybe one stage or two stage ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
London. Now, my next guest is aiming to make European space history. She's chief executive of the Exploration Company, a developer of reusable space capsules that is trying to bridge the gap with the U.S. and become Europe's main rival to SpaceX. Now, the firm recently signed a cargo deal to send the first European space capsule to a commercial space station, potentially as early as 2027. Hélène Huby joins me now, one of the only few women in the world to run a rocket space capsule business. Hélène, thank you so much for joining us. I mean, this is extremely exciting, and it's incredible the growth that you've seen over the last 10 years. Can you give me a little bit of a timeline on when you're expecting Nyx, the capsule that we're seeing behind you, to be completely viable?
Yeah, thank you very much for having me. In terms of timeline, so we plan to have our first flight of a prototype capsule this year already, June, mid of June. And then the second prototype again in 25. So flights are coming very soon. And then indeed, the first flight with the full-scale model in 27, going to ISS, International Space Station, and back.
I mean, that's extremely exciting, and especially that you're doing it for Europe. That it feels actually from where we're sitting that Europe is lagging a little bit behind the space race. Do you feel the same?
Lagging, yeah, you're right. Europe is lagging behind the space race. But if we look in the past, like if you look at the Airbus history, for example, we were lagging behind. And then we said, okay, let's do a catch-up, let's be bold. Then we started by catching up, and then we put on the market the A320, which was a revolution. So that's a bit the strategy of the Exploration Company. We start by catching up. Yeah. Europe had no capsule so far, no capacity to do in-space transportation. That's what we do. So we literally enable Europe and other nations to take part in the building of the new space worlds. And afterwards, so this is our first vehicle that you see, but afterwards, we plan to have a disruptive vehicle so that we can, let's say, really capture it and hopefully becoming, let's say, the Airbus versus Boeing, so the Exploration Company versus SpaceX.
And so you're basically really aiming SpaceX, right? It's kind of
I
like
mean,
a rivalry.
right now, I think there is the need for more competition on the market. If you speak with private space stations, if you speak also in the US with NASA officials, etc., I think a lot of people will welcome a bit more competition.
When's the first person going to space with exploration?
With Nixon.
Yeah.
We start with cargo, because cargo is easier. Typically, it takes, let's say, 5 to 6 years to build a cargo vehicle. It takes around about 300 to 400 million. So this is also something which is fundable by private investors. We're actually the first company in the world building this type of capsule being funded by private investors. And for human, it takes around about 10 years. It takes around about 2 to 3 billion. So yeah, it's not tomorrow.
Yeah.
But again, if you look at what SpaceX did, within around about 15 years, they built cargo and then human capsule, and that's what we aim at too.
And this is so your main challenge going forward, apart from the technology, is it funding?
We've been, I would say, quite successful so far with regards to funding, because we've raised around about 72 million USD in 2.5 years, which make us actually the most successful space tech company in terms of fundraising so far in Europe. But yeah, it's true that sometimes investors, especially in Europe, they see more the risks than the opportunities, while in the US, they see more the opportunities, and then it's worthwhile taking the risk. But this is changing. And the way I present the company is basically to say, okay, look, we are building an infrastructure. So you have a huge capex at the beginning, but like any infrastructure, just very few are going to make it. So if we are the ones really making it, then it's worth taking the risk, because afterwards, high gross margin and like regular flights coming like every year.
I mean, it must be wildly exciting also to think that this is in the private space. But will politics get involved? Like, do you think about things like that, or do you just want to get the first person, the funding, the first person?
We do both. We are very, very focused on executing. So far, apart from delays that were due to launcher delays, so not our delays, but let's say launcher delays, we've been on track. We've been overshooting our cash targets every year since company creation. So our investors are quite happy for the time being. So we are very, very focused on delivering on time, on cost, and quality. But space is a mix of private and public business, and will stay so. So in our case, for example, we had to convince, together with the European Space Agency, the 22 member states of the European Space Agency, to say, okay, hey, it is time now for Europe to have its own transportation vehicle. And they actually decided that in November last year. They've opened a competition in December to buy for the first time in Europe a cargo demonstration, so a capsule, hopefully ours, flying to the International Space Station and then coming back and being reused. And of course, we've contributed to this political push. And it's very important. And also the way to have this equilibrium, I would say, between private funding and political agreement. The way we do our business, we ask, let's say, European Space Agency, the public entities, to buy missions. And we fund the development cost with private investors. So public needs to act as an anchor client. And this is also very new. It's the first time in Europe history that European Space Agency is really putting in place a competition where ESA, European Space Agency, acts as an anchor client, which NASA did actually 15 years ago, which really gave birth in the US to the new space ecosystem. So we are quite excited to pioneer that together with ESA and the member states.
I mean, there is this idea that it's really the American billionaires that are going after this. What's the value? I mean, we have actually also a massive shout out to our space reporters who went back to a conference and said, we need to talk about sustainability. We need to talk, of course, about some of the trash in space. We need to talk about the challenges of hiring and the funding. What do you worry about the most? And is it distracting having so many billionaires in the space?
So first, I want to state some words about against this idea that it's only billionaires. If we look at, let's say, Expression Company, we started with 50K in the bank account. I am not a billionaire. and again, first time in the world funding this kind of capsule privately, and for the time being, so far, so good. So I think it's a question of developing a technical roadmap and business roadmap which fits with VC's KPIs. Like if you say to a VC, okay, I need 1 billion, and then you need to wait for 10 years, I'm not sure you'll find a lot of investors. If you say, okay, I have a 1.0 vehicle, a 2.0 vehicle, and then the final vehicle, it's easier because people can see that you make progress, that you stick to your costs, your planning, it creates trust, and then leverage for, let's say, further investment. So no, it's not only for billionaires, but I'm very happy that some billionaires, let's say, have pioneered a way to do space differently. About sustainability, I think there are two aspects. The first one is space kind of polluting the Earth when we launch rockets, where we build capsules, etc. And here it's like the aviation. We, the industry, we have to play our role, we have to do our part so that step by step we reduce our carbon footprint. And at the Exploration Company, we are the first in the world to use green propulsion system to fly our capsule. So it means if we compare what we do with a typical space capsule using hydrazine, only for the propulsion system, we have 75% less impact on the environment than a capsule using hydrazine. And of course, we need to do more, but there is a responsibility on the industry to build rockets, to build spaceships in the most sustainable manner. And then what we tend to forget is that space exploration, it's a huge accelerator for technology on Earth, which are good for the environment.
I was going to ask, why did you go into space?
Why did we go into space? Yeah. I think first is a fundamental human being stuff. If you look back in history, where we're just at the very, very beginning of the human race, basically. We started in around about Middle East Africa, and then we explored. We went to Europe, we went to the Americas, we went to Asia, etc. So, and then every time in history, every time we got new technology, like the ship technology, like the airplane technology, we just started unleashing that technology and exploring further. And I think now what is happening in space, we are kind of a tipping point from a technological perspective, where like in the, let's say, 15th, 16th, 17th centuries, we had very big ships. We could explore the Earth. Now we start to have very big spaceships, which are reusable. Tomorrow, that the spaceships will be able to refuel themselves in space. So it makes space travel actually much more accessible. Something that we can do from a price point of view and from a technological perspective. And I think we will just explore because this is who we are. So there is no why do you go to theater? Why are you listening to music? Just because you're a human being. So that's the fundamental reason. And then there are, of course, political reasons. There is a race between China and the US, so like prestige. There is also wars. You want to sustain in space, let's say, strategic positions. You want to develop, let's say, new weapons in space. You want to make sure you protect your space infrastructure. Space has become so important for Earth that you need to protect the infrastructures.
Hélène, thank you so much. I could talk to you all day, but we do need to also talk about inflation. Hélène Ubieder, thank you, the Chief Executive of the Exploration Company. Now, some breaking news also just in China, actually raising some $27 billion chip fund to counter growing U.S. curbs. Interesting that this comes also on the day of the Bloomberg scoop about China not being fully sustainable in terms of trying to do some of the nano chips. Now, coming up, we'll also break down U.S. President Joe Biden's State of the Union address. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now,
You can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back.
Inflation moderating. The latest round that we have of harmonized inflation is about 2.2%. So in April next month, we will be revising all of our fiscal and macroeconomic forecasts in Ireland, and I anticipate that we will be downgrading our forecast for inflation in Ireland for 2024.
Well, that was the Irish Finance Minister, Michael McGrath, on downgrading the forecast for inflation. Meanwhile, the ECB's Holtzman has also said a change in rates may be in preparation. There's more and more, of course, of a consensus from certain European countries that a rate is cutting maybe sooner than the markets expect. Now, in his State of the Union address, President Joe Biden announced the U.S. military plans to establish a temporary port on the Gaza coast to ramp up the delivery of aid and reiterate support for Ukraine, and warned Congress that democracy is under threat at home and abroad.
My purpose tonight is to wake up the Congress and alert the American people that this is no ordinary moment either. Not since President Lincoln and the Civil War have freedom and democracy been under assault at home as they are today.
Well, I'm now joined by Bloomberg's Kruti Gupta and our EMEA News Director, Rosalind Matheson. So thank you both for joining us. Ros, when you look at how President Biden did, I mean, this seemed to be the kickstart of his campaign. What will he attack Trump on?
Well, it's interesting because he repeatedly tore into Donald Trump in his speech without ever mentioning Donald Trump by name, just calling him his predecessor. But this was all about laying out his stall for the campaign ahead, because clearly it's likely to be Donald Trump and Joe Biden rematch again in the election. And so what he was doing was looking at Donald Trump's record, both as president and in the aftermath, you know, saying that Donald Trump is still very much a factor in Republican policymaking and their behavior in Congress, certainly the gridlock that we're seeing at the moment over a number of key bills, that he's a factor in all of that, and talking about the contrast with him and pushing his record forward into a second term, laying out all the things he said he would do in a second term and contrasting that with what he said Donald Trump did or did not do in his first term, and casting that really as a chance, you know, to promote the U.S. Both at home and abroad as a place for freedom, for democracy, and for values. So you can see the echoes of the campaign ahead. Certainly the next couple of months are going to be very interesting, because Donald Trump was pretty quiet last night in the aftermath of the speech, but seeing them on the campaign trail is going to be much, much more interesting in terms of how they're really going to go against each other.
Kruti, a couple of things, actually, that, of course, it seems that the election will be decided on, which is, first of all, the age of the candidates, but then immigration and the economy. Is the biggest worry that the economy may be doing better than 2 years ago, but the Americans are not feeling it?
It may be a worry for the Federal Reserve. It is not a worry for Joe Biden. And a big kind of stalwart of his speech yesterday was talking about how strong the American economy is going. He's added trillions of jobs, especially through his, thousands of jobs through his Inflation Reduction Act, and also decreased the national deficit by $1 trillion. This is relevant coming in the context of just about 48, 72 hours where he has a new budget proposal coming about how he would tackle the U.S. economy. And that includes adding more jobs. That includes pulling back on the deficit reduction plan and taxing more corporates as well. So the money issue front and center, but so much of that is, to your point, tied to the controversy around the border and how they're going to tackle the Mexican border. He actually named in his State of the Union speech, talked about this bipartisan bill to tackle the southern border, saying within this bipartisan bill, which, by the way, has not been passed yet, and he said that it was due to pressure within the GOP party. Again, another comment directed at President Trump without actively naming him, but said that this would be something that would give him, as the president, power to even shut down the border if you start to see an influx of migrants. So really covering the gambit in terms of the money questions.
Roz, what can you tell us about what's happening, actually what President Biden said on Gaza, said on Ukraine, and his commitment to trying to do something?
Well, certainly there again, he was contrasting himself with Donald Trump. He was saying that Trump really allowed Putin, emboldened the Russian president, Vladimir Putin, and then he subsequently invaded Ukraine, and that only he can push to contain Putin from potential further ambition when it comes to Europe, that Donald Trump would not be engaged in that. So saying he would be acting in the interest of the US there. On Gaza, it's a bit more complicated for Joe Biden because, of course, he's been a strong supporter of Israel, but also expressing increasing concern about the situation inside Gaza, where Israel is conducting its offensive. And that's with one eye on the electorate at home, because he needs both the Jewish vote and the Arab vote. That's not inconsequential on either side. And he needs to walk a line there between supporting Israel, but also not alienating the Arab vote. And that's a real risk for him at home at the moment, that sense of frustration that the US has not done enough to rein Israel in. So he was talking about the role of the US there, but certainly with one very clear eye on the US domestic calendar.
Yeah, thank you both for joining us. Kriti Gupta there and our EMEA News Director, Rosalind Matheson. And the jobs report later today, of course, feeds back into the economy and therefore possibly the election. Coming up, Bloomberg also understands that Klarna is likely to list in the U.S., but the chief executive tells us the location is not yet decided. More of our interview next, and this is Bloomberg.
Names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to create index products, and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything. From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
We have met the criteria that we have set up for ourselves to IPO.
It happens this year?
Well, I hope that we will be able to make it happen quite soon.
And New York?
Well, that is not decided yet.
That was the chief executive of Klarna on the company's plan of going public. Now, breaking news, we also understand from Reuters that the BOJ is leaning towards exiting negative rates in March. This means that an exit could come as soon as later this month, and we understood that they might choose to do so in expectations of stronger results, for example, at this year's spring wage negotiations. So it was meant to be started in April, and there is now chatter that it could be as soon as March. Now, my next guest says the average person sees about 10,000 commercials a day. Now, with daily information overload, how do we consume media without it consuming you? Well, I'm now joined by Marine Tanguy. She's the chief executive and founder of the MT Art Agency, a global talent firm representing the world's leading contemporary visual artists and author of The Visual Detox. So, Marine, first of all, congratulations on the books. I know it came out this week.
Yes, literally yesterday.
Very exciting, but also it goes through, who owns some of the IP, who owns the images, and how much we look at every day.
Yeah, and I think you said it, like 10,000 images. I hope you were surprised as well, because I was surprised when I heard this number. And only 1% of it is art. Most of it will be commercial imagery. What do we call our visual world is your laptop, it's your phone, it's your TV, but it's also your commute to work. And that's actually most of your time that you spend throughout the day, because at work you also be on your laptop. And that is basically like regulated by advertisers. The market right now, advertising market, is worth 650 billion. Is in 10 years' time projected to be 970 billion. Yeah. And they regulate most of what we become, what we desire, our insecurities, what we want,
so, I guess the problem is, do they regulate it? So out of the 10,000 images, how many do I know are commercial, and how many do I think are maybe art or something posted innocently that's actually has commercial value behind it?
So most of it will be commercial, and I think most of what people will be consuming on social media will still be within a reinforced idea of you should aspire to this lifestyle, you should consume X. Actually, I would say most of it is commercial. I think art is 1%. I think nature will probably be a tiny percentage as well. And that's really worrying. The reason why is because commercial imagery is built to make you dissatisfied with your life. If you were happy with your life, you'd not be consuming. We know that art and nature is the total opposite. The more exposure you get to those visuals, ultimately the happier you are. And you'll be developing your imagination, your creativity, your visual critical thinking. So it's also, in light of the mental health crisis, the cost that this advertising, this constant commercial imagery is generating. And I think, as you know yourself through global conflicts as well, like what kind of images do we use when reporting on conflicts? Do we, at 6 a.m., are we ready to be confronted with some of that imagery? What is the right context for it? I think it's all the questions as those 10,000 images are going to become 20,000 in just a few years' time that we need to really ask.
Right. Are you calling for people to actually just be much more aware of what they're consuming and looking and how they interpret? Or should regulators and policymakers step in?
I think the book is first awareness. Second, understanding of that language. 65% of us are visual learners, but we don't think we can speak that visual language. Third, taking actions. There are many ways in which are described on how do you ultimately take actions. Behind the scenes, I hope for policies. I feel realistically we haven't consented to being targeted relentlessly in our public space. It's our civic space. I think there should be some form of regulations as we become aware of the impact of those. And I think, again, by 2050, 75% of the images we're going to have a look at will be generated by AI. So there also needs to be another questioning on the rise of artificial intelligence. That's, for me, is different because that's regulations, policies. The book is not about that. The book is about what you can do on your own and how you can regulate that.
But it really goes to the heart of actually maybe needing watermarks, right? For fake news, AI, but also some of the things that we see that is commercial.
Totally. Well, yes, because it's your brain cannot basically process 10,000 images a day. It's just too much. And that level is damaging to our brain per se, and is overwhelming, and it's making us disincentivized and actually not being able to really process information properly.
Marine, as always, thank you so much for joining us. What a wonderful way to end, of course, the Pulse on International Women's Day as well. Marine Tanguy, Chief Executive and founder of the MT Art Agency and author of The Visual Detox. Now, we'll have plenty more throughout the day. Remember, it's U.S. Jobs Day, not only International Women's Day, but it does have an impact on the U.S. election. And then we had that news, of course, from the BOJ and the impact it has on yen. This is Bloomberg.
ask you about politics. You've been involved advising presidential candidates, and I presume presidents as well. You ever have any interest in serving in a senior position in the federal government or running for office?
Absolutely, unequivocally, no.
The aggravation factor isn't worth it?
It's the aggravation factor, but it's more importantly is I don't believe there's any integrity in it.
So you do give money to politicians, though, because that's the system, but you...
It's part of the game. I think, to be honest, I think there's a need for a multi-party system in the U.S. to give more people a choice about where they can throw their voter support and their political support, but also to cause the country to sort of come together by having everybody have a role in deciding what is in the long-term best interest of the country. I've often believed that Black Americans as a people and as a voting bloc should adopt the same position that the original founders of the Congressional Black Caucus had in early 1970. Their philosophy was enunciated like this: Black Americans should have no permanent friends, no permanent enemies, just permanent interests.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Or other authorities.
Could face bigger challenges next.
Fed was going to keep rating World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Good morning from our world headquarters in New York. I'm Menace Grenning.
And I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bonds rally. Powell signals that the Fed is getting closer to the confidence needed to cut those rates. The focus now shifts to the jobs data due at 8:30 today.
Biden takes aim at Trump in his State of the Union address.
My purpose tonight is to wake up the Congress and alert the American people that this is no ordinary moment either. Not since President Lincoln and the Civil War have freedom and democracy been under assault at home as they are today.
And a Bloomberg scoop, Huawei has used U.S. technology to produce advanced chips in China last year. A very good morning. How many records have we made? Bang, bang, bang.
So many I lost count, Manus.
So many she lost count, but I can tell you this, not just the S&P on the headline, but also the wider market has made a new record high. S&P futures up by 0.1%, but it is an AI frenzy, whatever way you look at it. That leadership of NVIDIA up for a 7th session in a row, up 87% this year, clearing $1 trillion in additional market cap. Abnormal times, abnormal gains, the ferocity of which Michael Hartnett refers to. We've only seen this level up by 25% in 5 months in markets, 10 times since the 1930s. When it comes to that breadth, there is a little bit more to be had. Broadcom, however, just a jangling of the nerves in terms of the chip narrative. Broadcom down 1.2% ahead of the markets. Yes, they see AI fueling extra demand, but their chip delivery at the moment is a little bit lower. Have a look at this. We are seeing more records in Europe, and Novo Nordisk just the bulwark of Europe. This is their obesity pill, their new obesity pill, showing pretty good results, Danny. And HelloFresh on the other side in Germany, sinking 42%. So you've got the drug company with the one holy grail, how to lose weight easily if you have big issues around that. But HelloFresh down 42%. Good morning.
It's hard to find other trades besides weight loss drugs, and AI. That seems that this is what the market is built on. Now, some breaking lines from Reuters just moments ago, according to sources familiar, telling Reuters that BOJ officials are leaning towards exiting negative rates in March. The reaction in yen is, as you would expect, it is strengthening versus the dollar. We're at 147 per dollar. That's the strongest of the yen in about 1 month's time. Meanwhile, two-year yields basically unchanged. Now, we have seen a lot of bull steepening over the past 24 hours. Two-year yields fell by 5 basis points in yesterday's session. We're back below 4.5% for the first time in about 1 month. It is the dovish language coming out of central banks. It is Lagarde seemingly giving the green light to a June being the date of when we're having confidence to cut. Powell saying that we are close to the confidence to cut. The confidence is there, folks. Meanwhile, gold at another new high. That is at over 21,000. It gains by about 0.4% today. Now, Manus, you mentioned Michael Hartnett over at Bank of America. On that note, too, he continues to be on bubble watch. Now, they have called AI a baby bubble, but looking at the history of bubbles, he says the Fed causes bubbles and the Fed pops bubbles. And in 2024, the Fed's determination to cut rates means we're not too far from it. It being the peak, the zenith of this bubble, Manus, because that's how these cycles work, that if the Fed is getting close to cutting rates, maybe we are at peak bubble.
Well, that's a question that we're going to be able to put to our next guest, but he talks about the kind of bullishness that we've had. In the past couple of years, you had a dogmatic bear of 2022, a pragmatic bear of 2023, until the fury of that rally came in the autumn time, Danny, at least until October. And then we have these cyclical bulls, which stay the full bull, the full Monty, until the first rate cut.
Or until payrolls comes in negative.
Yes. And he says that is the only thing that can perhaps unseat the determination, as he says in this rally. The risk of this melt-up determination is a poor payrolls. Well, let's just bring the risk of this bubble forming to Seema Shah, Chief Global Strategist over at Principal Asset Management. Seema, great to have you with us. I mean, look, this is a fairly informative piece by Michael Hartnett, is that he senses, it smells like we're going towards a bubble moment in these markets. I've just given you the AI frenzy narrative. Take a breath and contextualize whether you think that there is the hallmarks of bubble in these markets, or can it continue given the narrative that AI will help us and earnings will rally?
So great to be on with you. Look, I actually don't think of this as a bubble at the moment. You know, this market is backed up by strong economic growth. Earnings growth is positive. So unless you're really starting to see valuations move up, which are not backed up by that progression in earnings, I don't think we can consider it as a bubble. There are, of course, a lot of comparisons to be made in terms of how expensive the market is for tech. But even from that perspective, I don't think that this is a fair comparison to the tech bubble, because you're seeing that these companies are really backed up by very strong earnings growth. Their balance sheets are very strong. So in a way, as he said, it's only if you start to see a negative payrolls print, if you start to see recession concerns starting to bubble up, then we'd have some concerns. But at this stage, I actually think that this rally, fine, it's vulnerable to a slight pullback, but I think it can keep going through to the end of the year.
Seema, so does that mean we get to a world where bad news is bad news for equities? Because for much of the past, I don't know, it feels like a century, Seema, but I know it hasn't. But every time we get a piece of bad economic news, it fuels another leg higher in equities, because we think, oh, great, we're going to get cuts. So are you saying that that will shift at some point?
I think it will shift at some point. I mean, I think the one thing that we are starting to hear is people are starting to split the idea of economic growth impacting inflation. So there's this idea growing that the economy can grow fairly well around trend growth without necessarily reinflating those inflation pressures. If that is the case, then yes, we're going to go back to a point where the bad news is bad news. But I think we're still a little bit further to go for that.
We heard a lot yesterday from two core central bankers, one from Lagarde, who undid a lot of the dovishness that came into the market when they when they lowered the inflation outlook, and obviously downgraded the growth outlook. But she was at pains to say, we're moving from a holding season to restrictiveness to normalization. And we need to be careful not to commit to the rhythm, the magnitude, or the time. Loretta Mester yesterday talks about the mistake that would be made of moving too quickly. Do you think the divorce in markets is now, the assumption is that we go in some kind of synchronized cutting fashion, but really the narrative from Powell and from Lagarde was, this is not going to be a lockstep cutting as you've seen before?
Absolutely. So look, they've got the benefit of history for them to learn from. And those historic lessons are that, you want to tread very carefully at this point. If economic growth does reaccelerate and we haven't seen that split between growth and inflation, well, then the risk is always going to be there that price pressures take off again. So from my perspective, for the Fed, certainly once they start cutting rates, they will go fairly cautiously, not necessarily doing back-to-back cuts because they need to cut and then see what the impact on inflation is. The ECB and the Bank of England, actually, for that matter, are quite different in that their economies are already struggling, near stagnation, the UK in recession. So once those central banks start to get going, and they will take a little bit of time because they have got that cautiousness with regards to seeing sustained disinflationary pressures. But once they start to get going, we are expecting them to move with greater urgency than the Fed and probably have a more extended rate cutting cycle than what we're going to see in the US.
It is interesting to hear Lagarde be more reserved than Powell. The language seems like it continues to change. Actually, maybe that's not quite accurate. What it seems to be is that Powell comes out and endorses cuts at some point and is more dovish on that front. And then you get this whole host of other speakers who say, wait a minute, we're not as confident, and they don't sound as confident as Powell. What do you make of that back and forth? Because Powell had the opportunity in front of Congress to sound more reserved, and he didn't. He said, we're near that confidence for cutting rates.
Yeah, Danny, that's a really good point because actually this isn't unusual. For the last couple of months, that has been the trend of a very volatile communication policy from the Fed, of one message from Powell and then it almost being walked back by other Fed speakers. So it was a little bit surprising. And actually, if you can do that comparison with the ECB, I think the one thing that Lagarde has got quite right is that her messaging has been very consistent. It's been very clear. And I think everyone is quite clear on what the message from yesterday was, which is that, look, they're leaning towards June rate cuts, but they're very data dependent and they want to see how wage growth pans out. Whereas from the Fed, I don't think that we have that amount of clarity, which, as I said, it's been fairly typical. I wouldn't be surprised that over the coming weeks, we do see another set of Fed speakers coming out and sharing their own perspective, which, of course, unfortunately does add that volatility to the market.
So the risk in the very near term, then, is what, Seema, for markets? We're just showing the euro-dollar, again, trading that little bit lower this morning. Yields, as Danny said, traded to a one-month low on the back of this hope from Powell. So as you look at markets, we are full risk on, equities banging out record highs, yields are turning lower. Just contextualize risk for me at the moment. If you don't believe that we're in a bubble, is now the time that you go for breadth?
So look, I think that over the next couple of weeks, couple of months, there is still that potential for volatility. Because, we're still quite data dependent. We're going from data point to data point. We need to see, of course, what the jobs number is today, but of course, what the inflation numbers. And if they come in slightly hot, then you're going to see the market pulling back their expectations and maybe pushing out that date of the first rate cut, which will add volatility. But we do have some confidence that around the middle of this year, so once you start to look at the trend rather than the month-on-month side, the trend is pointing to continued disinflation, and it's backed up by fairly solid growth, slightly slower, but still solid growth. So from that perspective, if you're able to take more of a 6-month perspective, even a year perspective, this is a fairly risk-on environment. And there's a lot of parts of the market which were quite unloved last year, which have fairly attractive valuations. And we do think that that's where investors should start to focus their portfolios.
Where is that,
so that's
Seema?
not saying to...
Is that small caps?
Yeah.
Is that somewhere on the
You're
curve?
going to make her day. You're going to make her a week. If you say the word small caps now, you be careful what you
Friday.
say.
I deserve a present.
Danny, I'm going to make your day. I do actually think that small caps have got a lot of potential for this year. I do think that the road for the next couple of months is going to be very rocky, and it's not going to be a straight line up. But once you get to the point where rate cuts are very clearly envisioned, and it's backed up by still positive economic growth, that should really be a green light for small caps. I just want to reiterate here, though, that doesn't necessarily mean that we have a negative view of that mega cap tech space. We do continue to think of that as a long-term, very important part of the portfolio, but it's about thinking about where else is it that you want to deploy your assets. Remember, a lot of retail investors are still sitting in some cash. So there is a lot more to go in terms of where that firepower can come from.
Yeah, I mean, we're going from $6 trillion, looking like maybe we'll get to $7 trillion for those cash portfolios. Seema, so wonderful to have you this morning. Thank you for making my day. Seema Shah of Principal Asset Management. Okay, Manis, let's get to some of the other top stories that are trending on the terminal this morning. Klarna is taking inspiration from Google as it prepares for an IPO. The CEO of the Swedish Buy Now, Pay Later firm provided some details about the listing in an exclusive interview with Bloomberg's Tom McKenzie.
We have met the criteria that we have set up for ourselves to IPO.
It happens this year?
Well, I hope that we will be able to make it happen quite soon.
And New York?
Well, that is not decided yet.
Rivian announced its halting plans to build a new multi-billion-dollar factory in Georgia. The move will lead to more than $2.25 billion in savings. Production of Rivian's forthcoming R2 model shifting to an existing plant in Illinois. The R2 is a cheaper model and will compete head-to-head with cars sold by Tesla.
Bloomberg has learned that Kristalina Georgieva is poised to secure sufficient support for a second 5-year term as IMF managing director. She needs the backing of major European nations and the U.S. to ensure the success of any potential bid. Sources say Georgieva's pursuit of a second term would come with the understanding that she has the support of France and Germany.
Independent Senator Kirsten Sinema of Arizona has ruled out a third-party presidential run on the no-labels ticket. She's the latest prominent centrist to do so. Sinema announced Tuesday she wouldn't seek a second term in the Senate.
Speaking of politics, coming up, President Biden takes aim at his predecessor at the State of the Union address. We'll have some of that more later in the show.
But up next, producing an advanced chip last year, Bloomberg has learned that Huawei used the U.S. suppliers to help create it. We discuss.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
It's Jobs Day, and Bloomberg has the report under surveillance.
We've had unemployment snapped at 4% for 2 consecutive years.
This is a two-sided sword.
There is a softening in labor demand.
Today, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
This is a very strong labor market.
The White House has got to love this.
This is something huge they want to run on.
Where is the slowdown?
If you look at the reality, it ain't showing that.
The February Jobs Report, today on Bloomberg.
It's Bloomberg Brief on this Friday. I'm Danny Berger alongside Manus Cranny in New York. All right, a Bloomberg scoop. Huawei relied on U.S. suppliers, Applied Materials, and Lam Research to manufacture an advanced chip in China last year, according to people with knowledge of the matter. That's the right way to say that. Joining us now is Bloomberg's Alex Webb. Sorry, it's a little bit Friday brain at the moment. I mean, Alex, this is exactly what the U.S. did not want in trying to prevent advanced chips from making their way to China. So now with this Bloomberg scoop in hand, what now?
Well, the thing that's interesting about this is actually it's more about indicating China's limitations than necessarily any problems on the U.S. side. This machinery, this technology that was acquired from Lam Research and Applied Materials was acquired before October 22, which is when these bans came into effect. It shows that actually China, in almost all certainty, does not have the homegrown technology required to make the bleeding-edge chips. We know this is the case with ASML, which makes the extreme ultraviolet lithography machines. Those essentially etch the patterns into semiconductors at the smallest, right now, possible scale to make the most bleeding-edge chips. There is only one company in the world that can do that. That is ASML. But, as people have long said, it isn't just about ASML. It's about the whole supply chain leading into those machines, about all the other moving parts required to make the best chips, and China, for the most part, doesn't have it.
And this maybe plays to the point that has been made by Gina Raimondo, talking about the strongest possible actions to ensure national security. And if anything, those are ratcheting higher. And if we go into a potential change in the White House, you may look at more tariffs and certainly a different policy there. Look, China's also readying a $27 billion chip fund to counter these growing U.S. curbs. Tell us a little bit more about that.
So it's actually something that a lot of the chip makers have been saying, namely that if there are these sort of export restrictions on Chinese companies or on China itself, then of course it massively incentivizes China to try to create its own domestic competitors. That is what this is all about. 27 billion is clearly a big chunk of change. It is the third such fund. When it's finally realized, you have to remember that semiconductors are possibly the most capital-intensive part of the technology industry. Not only in terms of development, which can be exceedingly expensive because the people, the engineers developing them are earning very, very good money, but also then the equipment required to make them. We talked about these EUV machines. They can cost upwards of $150 million a pop. Intel alone had $25 billion worth of capex last year. So 27 billion sounds like a big number. It doesn't necessarily get you anywhere near all of the way there. So it's a response to what the US is doing, but it is just a part of a broader response.
Let's just narrow in on a specific U.S. company, because we had Broadcom earnings yesterday. The reaction in the market has been one of disappointment. Post-market, pre-market this morning, Broadcom is falling. Now, they had weaker earnings, but they say, hey, it's going to all be okay. We're going to have a lot of AI demand, and that's going to offset the weakness. So what is this? The market not just buying that story, or is it something different?
Yeah, look, Broadcom is a company that basically doesn't have much direct AI exposure. It's really sort of in the network equipment or network chip space. So clearly, if you are building AI processors into your data centers, which is what has been driving NVIDIA's, sort of untrammeled growth over the past year or so, you need actually to have a way of delivering that data to and from the data centers. That's where Broadcom comes into play. But it seems as though they are not yet seeing the benefits of that. I think at this stage, maybe the market is getting a little bit savvier about just hearing the word AI is not enough to convince you to put your money behind a stock. The other thing about Broadcom to remember is that, it is built by Hock Tan from a series of very substantial acquisitions. The way that often he has made these acquisitions work is by massively slashing the spending on R&D. When you come to these new phases of new technology, you wonder whether that starts to have a negative impact.
Okay, Alex, thank you very much. Great roundup on the technology front. Yes, Broadcom, NVIDIA's poor step sister or brother. Alex Weather with the very latest on that. We've got to just mark where dollar-yen is at the moment, Danny. We've had a cracking week of a rally in yen. It's up over 2% in the week, and a nice additional leg higher this morning. And this is all on the back of more narrative, this time from Reuters, on potential timing of a rate hike.
Exactly. Reuters reporting that they are leading towards exiting negative rates in March, citing stronger wage negotiations and how those shape up. So your dollar-yen at 147 this morning.
Indeed. The risk is, of course, that they go for only one and done, and that was the view from our guest last week. But this narrative with wages hot at 2% could build.
Timelessness and sustainability go together, right? You can't expect to be timeless if we're run out of resources. So for me, sustainability is not a side activity. It's not a reaction to external pressure. It's core to who we are, what we stand for. And to a very strong extent, it's about future-proofing our business, right? You need to focus on sustainability to recruit. More and more, that younger consumer we're talking about, they want to work for companies that care about this planet, that do more than just kind of generate revenue and profit. You need sustainability to attract consumers. More and more, including that younger consumer, they care deeply about what are you doing differently? Are you making a difference? Investors, particularly in Europe, more and more place value on what you're doing in sustainability. Many of our partners have expectations on sustainability.
Next week, Bloomberg brings you the latest from China's annual National People's Congress, including China's budget plans, economic outlook, and geopolitical tensions. Coverage begins next week on Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg Brief with me, Menace Crenny, and Danny Berger alongside me. Taylor Swift, we know the impact she has globally. Now they're upgrading Singapore's GDP, Danny, to 2.9% for the first quarter. She's done 6 concerts in Singapore. That's the impact, but I'll give you the fact of the day.
Please.
Flights into Singapore, March the 1st to the 9th, rose by 186%.
Just when you thought we were done talking about Taylor Swift, this is what I will say.
Never speak enough about her.
On this International Women's Day. Have women creators make more things for women, and that is what will support the economy. I should say not just women, but Ray Dalio too. This is the best thing to come out of this, is Ray Dalio. I think we have the image, put this on Twitter and Instagram, that he was at the concert in Singapore saying Taylor Swift for president.
There you go. Do you know what's even more hurtful? She said, that looks like you taking a bad selfie.
I was just saying, I could see you doing a version of that. Maybe not specifically that, but...
It's tricky on a Friday on this show.
You would be more classy. You did do a whole produced video. It would be great.
More on markets.
we're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Welcome to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger. Here's what you need to know.
Bonds rally. Powell signals the Fed is getting closer to the confidence needed to cut rates. The focus now shifts to 8:30 a.m. and the jobs report.
Biden lays out his pitch for a second term and takes aim at Trump in his State of the Union address, saying democracy is under threat.
And a Bloomberg scoop, Huawei used U.S. technology to produce its advanced chip in China last year.
So I feel like it was only, 24 hours ago, maybe more, where I said, 60-40 is back. Turns out it's not back. Turns out everything decided to rally together yesterday.
Well, everything rallied, but the melt-up determination, according to Bank of America, Michael Hart, I quite like that phrase, the melt-up determination could be knocked by the jobs report, which we'll talk about next.
Yep, a big day coming up later in the morning. But in the meantime, let me show you where your markets are. Manus, you and I talked about the yen just moments ago. The strength continues. A Reuters report roughly about 30 minutes ago, a little bit more than that, essentially saying that the Bank of Japan is now leaning towards a march getting out of negative rates, that they're looking at the Straub wages data coming in, and that is giving them the confidence to do so. That builds on language we've heard over the past couple weeks and the strong wage inflation numbers we got from Japan. Your two-year yield basically unchanged, lower by about 1 basis point this morning. We moved lower by 5 bips yesterday. We're back under 4.5% for the first time in about 1 month. You had Powell not sounding hawkish, and you had Madame Lagarde talking about this idea that June will be the time when they have the data they need to potentially cut. Meanwhile, you're also seeing that rally occur across Europe in sovereign bonds. And gold, Manus, another record high. I know you have equity record highs to show us, so I wanted to show us the beautiful precious metal trading above $2,100.
You're playing a dangerous game of poker this morning. It's to see me and raise me in terms of records. But you're right, the S&P 500 European stocks all making records, and they are continuing to trade higher. As Powell says, we are not far from the confidence needed, and that threw a flamethrower across risk yesterday with the bonds lower, the equities higher, and Lagarde as well saying we will have more data in April, taking us closer perhaps to June. She didn't say they were going to cut in June, but it's all about the comfort and the confidence to do so. Nvidia is just on fire. This stock again this morning up 3.25%, clearing the $900 very, very comfortably, up 87% this year, 7th session in a row. These are abnormal times, abnormal gains. This frenzy, the ferocity, Michael Hart at Bank of America says, perhaps can only be unseated by some kind of a dislocation from the jobs report. NASDAQ defies me. There you go, comes back to unchanged. Broadcom, it's bullish on AI, but its chips delivery was underwhelming. Stock down 2.3% this morning. And in Europe, when it comes to those weight loss drugs, Novo Nordisk's obesity pill is delivering good results. That's amycretin. You can lose about 13% of your body weight if you use that drug. So that's driving Novo Nordisk, comes back by 0.7%. Again, made a record high yesterday. HelloFresh tanking by 40% this morning as they pulled their targets. So that home delivery, meal delivery business under pressure, 42% down. Danny, good morning.
I can only imagine the frenzy that's going to happen should they get approved for a weight loss pill, and all of the executives who are terrified because it means we're not going to be buying their junk food. In the meantime, Manis, this idea of when bad news is bad news yet again for this equity market. We talked to Seema Shah about this, and she said, look, it will happen because the long-term trend is one towards of disinflation, and this idea of growth and inflation being tied is going to start splitting in the market's mind. So you can see weaker growth and actually start to trade on that because it won't be as linked with the inflation narrative.
Still, the commitment is to the upper echelons of big tech. However, she did genuflect to Danny's current obsession, which is when do you go for breadth, which is to the small caps. And that is your opportunity, which is to go for breadth.
Maybe one day it won't be my obsession, small caps, but it is for now.
We'll get you a new obsession for the second half of the fiscal year.
I just love an underdog, and that's small caps. Thanks, Manis. Of course, Bank of America, as you say, the one thing that could unseat this all is a poor jobs print, and we're going to get jobs today. It is forecasted to show a pullback in hiring. The median estimate in the Bloomberg survey is calling for a print of 200,000. Citi's call, though, is among the lowest at 145,000 jobs added. We have the woman behind that number. It is Citi's U.S. economist, Veronica Clark. Veronica, thank you so much for joining us.
Thank you for having me.
A bold call. You're going against the trend here. And as you said in the break, I mean, it's not like 145,000 is bad, but it's definitely below consensus. So what got you there?
Yeah, I mean, it's not a bad number. It's still a solid pace of job growth, kind of where we were running before we had the very strong 300K plus prints in December and January. So that's really the crux of our forecast, is that we do see signs that hiring is slowing down, that it is taking longer for people to find work if they do lose their jobs. There's still not large outright layoffs, but we're basically expecting that trend back from October, November to show up again in softer private services payrolls.
So you've got, I mean, that is a left-hand call, 145,000. So let's see. And it's good to be a little bit contrarian because consensus is so concentrated at the moment in this bullish narrative. But you do go for a slightly higher wages number. Can you square those two away from me?
Yeah. I mean, they are somewhat related. I mean, we have definitely seen this slowdown in hours worked, and that is usually a leading indicator, for labor market activity pulling back. And that strong wages number that we had in January, we had a 0.6% average hourly earnings.
Yeah.
That was because hours worked fell a lot, and I do think maybe consensus is looking for hours worked to rebound a bit more than we're expecting, but that trend is still falling. And there are just some maybe mechanical issues where we're maybe losing workers in relatively lower wage jobs, and that does boost the average wage.
I mean, this is the thing. We have sort of pinned expectations to 353,000 that we got last month. And that kind of figures has meant that all of the bears on this economy have decided to throw in the towel. You had Deutsche Bank, who was one of the first to call a recession, say, hey, maybe we're not going to get a recession. But Veronica, you and the team are still sticking with this call. Why are you not swayed by the recent data?
Yeah, we really are just trying to step back and not get too overwhelmed by whatever the last monthly data point was. There does seem to be a lot of recency bias out there, and we're really just looking at the bigger macro trends. And we have seen 4, 5, 6 months at least of hiring slowing down and hours worked pulling back. All those early signs that you would expect to see 6 to 9 months before you get a weaker labor market. And these things can happen non-linearly, like layoffs are really the last step in that equation. And we are still looking to see that maybe as we're getting to the spring. There are issues of reading into December and January data where it's a low activity period anyway. You're already losing a lot of jobs. There's very positive seasonal adjustment issues. And we are getting past that now with this February print.
So with that recession, call still there, a lower jobs number, idiosyncratic wages rising, I take it then you're going to take the other side of the trade. This market is moving to less than 3 rate cuts, the possibility of 1 rate cut. And if you go to the outside of the left tail, it is Apollo at none. So where are you, given your recession call and the timing of those cuts?
Yeah, we do think the Fed will start cutting in June, but we're penciling in 125 basis points this year, so that's June and every meeting after June. And partly that is premised on by the time we get to cuts in June, I do think you'll see some clearly weaker activity data, and the Fed would be cutting every meeting then.
So if we have that environment where the Fed starts to cut every meeting, we go into recession. What does the way out of recession look like? How difficult will it be to get real and sustainable growth back into this economy?
Yeah, I mean, we're not penciling in. I mean, some people maybe call it a mild recession. We would say maybe a run-of-the-mill recession. We're not expecting a deep downturn like a 2008 or a 2020, of course. But this is just a recession because rates are restrictive and things slow down. And when the Fed does come in and start lowering rates, I mean, I think you would be coming out of it as we're getting into next year. But it is almost that type of slowdown that's needed, I think, to really get inflation under control. And January CPI was a good example of that. You know, we've just not seen the evidence of a true soft landing. You'll either have the slowdown or you'll have some sticky inflation.
Let's just challenge, because you are coming on with a non-consensus view. So the guidance from the Fed at the moment is potentially 3, less than 3. I know we'll see with the dots, but you're saying that it's going to move at each meeting. And here we are, we're being guided that it could well be 1 in the autumn and done. So you really are pushing against the wind. What makes you convinced that this time the cycle of cutting will be similar to the past? Because that's not what we're being guided either by Lagarde or Powell.
Yeah, I mean, it really does come down to the activity data. You know, what if we do see the labor market slowing more? I think that is a situation where the Fed themselves would expect that they're cutting a lot more. So it really does come down to that. I mean, if we do have activity data holding up, if we don't get the recession, it does still seem like, you know, Powell, the Fed wants to be cutting as we're getting to the summer.
Is it the real rates narrative? I mean, Danny and I were just chatting about this morning. Is it at any level a real rates headwind in this economy?
Yeah, I mean, I think they are probably worried about that. I think they probably saw the same signs that we did last fall, that the labor market was loosening, and they really do want to avoid that recession. And so they're willing to cut and maybe sacrifice the inflation mandate a little bit in terms as we're getting there, yeah.
Okay, Veronica, thank you so much. That's Veronica Clark of Citi with her call at 145,000 for the jobs report. The whisper number is at 210 at the moment. Coming up, we're going to dig into President Biden's State of the Union address, jump-starting the 2024 presidential race. That's next on Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock?
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
My purpose tonight is to wake up the Congress and alert the American people that this is no ordinary moment either. Not since President Lincoln and the Civil War have freedom and democracy been under assault at home as they are today. Now my predecessor, a former Republican president, tells Putin, quote, do whatever the hell you want. I think it's outrageous, it's dangerous, and it's unacceptable. I know it may not look like it, but I've been around a while. When you get to be my age, certain things become clearer than ever.
President Biden taking aim at his opponent, Donald Trump, and pitching for a second term in the State of the Union address. And here's the response from the Republican Senator Katie Britt of Alabama.
Right now, our commander-in-chief is not in command. The free world deserves better than a dithering and diminished leader.
Joining Danny and I now is Lindsay Newman, the head of Eurasia Group's Global Macro Geopolitics Practice. Good to have you with us, Lindsay. What cut through? What was the standout, pivotal moment in that State of the Union? Because there were many topics, a lot of rhetoric, some of it hot. So what do you think cut through the voters?
Thank you, Menace. Thank you, Danny. Thank you for having me on this International Women's Day. Biden had two jobs last night. And if you're reflecting on it this morning, next day quarterbacking, his team and the president will be satisfied with the job that he did on these two fronts. The first was to convey convincingly his track record and then his agenda moving forward. And the second was to do so effectively without any gaffes. On the first, Biden talked about his vision for America, and that's really what cut through, talking about a range of big themes, everything from democracy under threat abroad and at home, to reproductive rights, to the economy and tax policy. And then he used the opportunity in front of what was surely more than 20, last year's was watched by 27 million viewers, to directly address this issue that's overhanging his campaign about his age. And he started it out, as you saw just now in the opening, by trying to make a joke of it, but also by then reframing it as something that is going to provide him with both wisdom and experience as he looks ahead. He also very subtly attempted to level the playing field by saying that his predecessor really is not that much older than him. But it's important to remember here that this issue will dog him. Polling is showing that Americans are concerned about his age.
Well, Lindsay, even if this does get a lot of viewers, I wonder if it's the right viewers, because there was a lot of criticism around Biden not doing the Super Bowl interview, because presumably that's something that gets a wider range of people. I mean, what type of people even watch the State of the Union, and is it, again, the right people that Biden needs to sway?
As we know, the viewers of the State of the Union do tend to slant older, and it does tend to be that sort of demographic that tunes in. Last year, as I said, 27 million viewers. That's quite a lot of eyes on it, and we have to think that we're at an inflection point right now. We've just finished Super Tuesday, where Biden and Trump both performed very well. Overwhelmingly well. They both dropped one primary race on Tuesday. And we're now at a point where it's clear that these individuals will overwhelmingly be the nominee for their parties. And we've entered the general election campaign. So those turning in, we're trying to understand what's at stake.
It's very interesting. The viewership for the Super Bowl is 123 million. And the classic argument against politicians is that living in a vacuum, speaking to a bubble, perhaps doesn't allow them to communicate with the real voters. I want to understand from you what happens next with Nikki Haley's voters. She exited this contest with a message for President Trump. It's up to Donald Trump to earn the votes. How important will it be for Donald Trump to change the narrative, to try and embrace the Haley voters? Because Biden has acknowledged that he's naturally a great politician. All great politicians do. They welcome everybody. But how important is it that Haley's voters pivot to Trump?
There's a lot in there in your question. I mean, we can't imagine that former President Trump is really going to change his message, right? He's been consistent in his approach, in his style, and in his policy approach, in his inconsistency. But we can't imagine that he's going to try to swing towards the middle to recapture what Haley was bringing to the marketplace. She won just a couple of races, but we know that this race is going to come down to a handful of swing states. The margins are not vast here, and on both sides there is a question overhanging of what, if anything, third-party candidates could do as spoilers. That's not to say we expect Haley to enter the race as the third party, but there are third parties currently running, and because the margins of victory here are going to be so small, there is the potential for that to play spoiler. Biden just this week again faced a number of uncommitted votes. So these margins are going to matter when it comes to November.
Right, because we saw her getting a third of voters in some case in these primaries, and Nikki Haley herself declined to endorse Trump. What difference does that make to have Nikki Haley's silence in backing the presumptive GOP nominee?
Well, Nikki Haley stayed in the race, right? Let's remember, because she was well funded. She had stayed in through Super Tuesday because the funding was there, because as she said, it reflected the fact that something like 70% of the polled Americans wanted somebody else on the ballot, and she felt like that person was her. The voters, that have taken the votes that have been cast in the last couple of weeks show that it's not the case, that voters specifically wanted her, despite this ongoing frustration around the rerun of a Biden-Trump presidency. So she stayed in because the money was there, indicating that the interest was there. But she, as you said, she hasn't endorsed Trump, and we'll wait to watch that. She said, she's not angling. She apparently is not angling for an administrative position.
Can we just circle off with what's happening with the Hamas-Israel war, the situation, trying to deliver? Biden orders a military bridge to be built, a port to be built, to try and get aid into Gaza. As you stand back and look at America's actions in the past couple of days, delivering aid by air, ordering this port facility to be built with no Americans on shore, is this America losing control over Netanyahu and changing policy direction?
It's a really big question. So we saw last night in the State of the Union, Biden confronted the ongoing conflict in Israel-Gaza head-on, but he waited till towards the end of his remarks to do so. And what we saw was him attempting to thread this needle, as you're indicating, to provide a balanced assessment of U.S. policy and U.S. views on the ongoing conflict there. So he started very clearly by saying that Israel has a right to go after Hamas, that Hamas could end this war just now if they turned over the hostages and laid down the weapons, but he similarly said we need to get more aid into Gaza to address the ongoing humanitarian crisis for the Palestinian people. And he then went on to say that that they have been tirelessly working for the ceasefire. And we have this very important date of Ramadan coming on Sunday. It's not a deadline, but certainly many on all sides and certainly in the Biden administration had hoped to see a ceasefire reached before Ramadan. And so instead, now we're hearing perhaps only the sort of developing news that was announced last night in the State of the Union is about this bridge that you mentioned. And the question is whether this is how much we need to make of whether this is a shift in U.S. policy or not. Certainly the U.S. administration is grappling with its frustration around the Netanyahu's government and its approach in Israel. And we will be watching for how many weeks it takes, for example, to even get such a port system up and running.
Yeah, Lindsay, I'm afraid we're going to have to leave it there. Thank you so much for joining us this morning. That is Lindsay Newman of Eurasia Group. Man, as quickly as we head to break, UBS hitting a 16-year high.
Yeah, I mean, big call from Morgan Stanley. This is where they go to overweight from equal weight, Danny, and they're predicting a strong comeback in the investment bank.
Good year for UBS. It's already up 5% so far this year.
Names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to create index products, and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
What happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
Watching Bloomberg Brief with Danny Berger and Manish Cranny in New York. All right, let's get you set up for this trading day on this Friday. New York Fed President John Williams will be speaking at the London School of Economics at 7 a.m. Eastern. And then it's the main event. The February jobs report comes out at 8:30 a.m. And today, it's International Women's Day, and it puts the focus on issues like gender equality and reproductive rights. So a very important day overall. But Manis, it will be those job figures like Bank of America says. It could be the thing that pricks this bubble.
It could indeed, and we just had Citi with us this morning calling 145,000. The whisper number on your Bloomberg terminal, if you've got one, is up over 210,000. So very, very clear differentials there. Some stocks to note, Broadcom coming in with their numbers, expecting the AI demand to help offset the weakness elsewhere in the business. Costco down 5% this morning. Revenue and gross margin trail the estimates. This is the reality of what's going on in retail. But then you flick over to Gap, which has obviously gone through a lot of a transformation story, and their earnings show the turnaround is making progress. Stock up over 6%.
Let's quickly whip through these bond markets before we get to the break, Manis, because we are seeing a rally across sovereign bonds. Most of the yields here are at their lowest level in a month. It is the Fed speak, it is the ECB speak. Powell declining to be overly hawkish, and Lagarde saying essentially, look, we're going to have the data we need come June.
Yeah, I've got to say, if you watched the Bunds and you watched the Euro yesterday, she really did push back. We did not discuss rate cuts, and we are in the process of discussing dialing back. We just had Seema Shaw from Principal, and she made the point to us that the ECB and the UK are going to have to do an awful lot more.
Yeah, well, a quick programming note for everyone, by the way. Because of daylight savings, we're going to take a little bit of a hiatus, but Manis and I will be back with you on the 1st of April, so don't miss us too much.
look at the number of women that want to learn the game, young girls that are joining on the tee, really an exciting time for all of us to really capitalize on this moment. When you look at women who are making most of the purchasing decisions in households, whether that's cars or that is home or financial services, and who are going to drive the wealth of the future, it's women.
Obviously, we have our car business and we need to have games here and all that sort of thing, but what else can we do? How do we grow the platform? The whole ticket pricing process. It used to be very yellow sheet of paper, maybe some numbers around it. There was not a lot of science behind it. We're now in the world and have been for many years, as most other similar businesses are, into dynamic pricing. So our pricing for a seat may change hourly if we see demand for that, all driven to maximize revenues.
The balance sheet is so important to the success of the team. And a big part of my role is to make sure that the balance sheet stays strong and that we are prudent stewards of capital. There are things that we can do that are irrespective of winning or losing. Take a look at the first budget that comes from one of the teams and ask questions about, do you really need to spend that much? Are you really shooting high enough when it comes to partnership revenue?
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
What we expect to get from the payrolls is a sequential cooling from the very hot print that we saw last month, but a still robust payroll print.
I think the labor market probably held up just fine. We're a touch stronger than where consensus is at 215,000.
I think it could actually be a really sound number. I mean, we think it could easily be 250,000.
There's potential for the economy to grow faster than expected because of productivity.
Last year, we had a big January job gain and another really strong report in February. History could repeat again.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
So Lisa told me off last time we did this. Let's get to the weekend.
Yes.
Is that how you want to start the program?
Please,
okay, I will start every hour that way.
Thank you.
Let's get you to the weekend. Live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance. It is Payrolls Friday. Equity futures on the S&P 500 positive here by 0.1%. As we often say on this program, the most important payrolls print since the last one until the next one. But this one is important. Will it double down on the boomy 353,000 of the previous month?
Nobody thinks that it will exactly double down, which is the reason why right now we're positioned for heads I win, tails I win, nobody loses, everything is awesome, because ultimately no one is betting on a reaccelerating in inflation or growth, and that basically is what we're expecting from the payrolls report that we get today.
And based on the data we've had so far this week, maybe they shouldn't. 200K is the estimate this morning, the median estimate in our survey. We've had the ADP, the services component, the employment component of ISM services earlier this week. None of it was this big blowout upside surprise that I think we all feared a few weeks ago.
Essentially, and I was going through this, and every time I kept thinking this, I kept kind of kicking myself. It's been Goldilocks. Everything about the data has been Goldilocks. It hasn't been too hot, it hasn't been too cold, and that's the reason why people are basically pricing out the idea of any kind of reinflating economy or true real weakness either. It's basically straight in the middle what everybody wanted to see.
Which is why we're looking at the prospect of another week of gains on the S&P 500. Equities to one side. We need to head down to Washington, D.C. in a few moments and catch up with Bloomberg's Anne-Marie. The State of the Union, taking aim at Trump, talking about his predecessor without mentioning his name. So it's like Voldemort for Democrats. Is this going to be the approach to the election later this year?
Yes, exactly. I was saying, yeah, it's basically, yes, he's not going to mention Trump by name. It is the predecessor. Also not mentioning abortion rights by name. Reproductive freedom is the new catchphrase as well. Honestly, he's setting it up as we are the alternative, not necessarily making a true pitch about some sort of new vision. He is talking about new ideas, but essentially it's doubling down on what he's done and saying, I'm better than the other guy. I mean, essentially, it's a repeat of that all over again.
Went through some stats. Let's go through those stats together. 15 million new jobs in just 3 years. 800,000 new manufacturing jobs in America and counting. Unemployment at 50-year lows, there and thereabouts. Do any of those stats resonate with Americans right now?
They're starting to resonate a little bit more, but essentially the answer is no, and it has been no, and it's simply because of just the cumulative inflation has been too much to overwhelm. That said, and this is something that I found really interesting and I want to kind of keep digging into, how much can Joe Biden keep doing to try to juice the economy heading into the election? How much fiscal is left, in terms of whether it's relieving student loan debt, whether it's pumping more money into infrastructure spending, whatever it may be, how much more can he do to try to give more leeway so that people's memories reset in a lower inflation and higher growth world?
It's a really good question. We'll catch up with AMH down in Washington in just a moment. In the nation's capital on that story, right now, let's get you set up for payrolls. Equity futures on the S&P 500, almost unchanged, positive here by 0.1% on the S&P. The bond market's set up as follows. Yields coming in a little bit, down a basis point, 4.07% on a 10-year. Bit snoozy in the FX market on the euro. Anything but on dollar yen. Bramo, dollar yen this morning. Yen strength again. Report from Reuters, following our report here at Bloomberg, that this BOJ is getting closer and closer to hiking rates this month.
Okay, and this is sort of like Lucy in the football a little bit, because we always think that they're going to hike rates and go back to zero, and then, it's pushed back. But this time seems different. It really does, because we've heard that rhetoric out of the government, out of monetary policy officials, and the market is all but pricing in with definitive kind of conviction that in the March 18th to 19th meeting, the Bank of Japan will, after a decade, more than a decade, lift rates to zero with what you're seeing in the bond market with yields at the highest in that nation.
Possibly,
2011.
maybe. Perhaps 147 on dollar yen. I mean, we'll see. That currency pair is negative by 0.7%. Coming up on the program this hour, Cameron Dawson of New Edge Wealth, counting down to the latest payrolls report. Jeanette Lowe of Strategas as President Biden frames his race against Donald Trump, and Myra Rodriguez Valadares of MRV on Powell's heated exchange with Senator Warren on Capitol Hill. We begin with our top story, counting down to payrolls. Bloomberg survey expecting a print of 200K with unemployment to hold at 3.7%. Cameron Dawson of New Edge Wealth saying the opportunity for the Fed to start cutting may be narrow. The Fed has a window to begin cuts in May or June without being too close to the election and having the perception that they are being political. However, the data may not support cuts in May or June. Cameron, I'm pleased to say, joins us now for more. Cameron, good morning.
Good morning.
What are you looking for this morning, and do you think it could derail that rate cut this year?
Well, if we continue to see upside surprises to the job prints, I think it is very likely that you could see these rate cuts get pushed back. We continue to watch things like PMIs and manufacturing data that suggest that there is a cyclical recovery that's brewing in this economy, which may not support that May or June cut, which then may close the window to be able to cut this year, or at least put us in a place where they're having to cut after the election.
You're talking about a cyclical reacceleration, and Chairman Powell is on Capitol Hill saying we're well above neutral, we're very restrictive. Those two things don't really add up, do they?
No, because we're simply not seeing the weight of these interest rate hikes on this economy, because this economy is simply less levered to short-term interest rates than it has been at any other hiking cycle in recent history. This is because of the great refinancing that we had in 2020, 2021. Howard Marks talked about that yesterday. You refinance your debt, the Fed hikes rates, you're not seeing your interest costs go up like you have in prior cycles. Now that becomes an issue in 2025. That's what we're looking for in refinancing kicking in, and that's when we could see some economic weakness start to brew because of stress on balance sheets. But until then, you are seeing the cyclical recovery because of fiscal stimulus as well.
Which we'll get into in just one second. I want to just double down on the question that John asked, which is really compelling, especially in light of what Jay Powell said yesterday. Basically, we're really close to cutting rates, despite the fact that people like yourself are saying there is this risk of reinflation. So what do you see the likelihood of a rate cut accelerating that reinflation in the economy? How do you bleed that through a market that seems pretty complacent about this risk?
Yeah, we know that there is a relationship between financial conditions and nominal GDP growth, but it's financial conditions that are sustained at easy levels. So if we continue to have these financial conditions stay at the levels where they are today, at 2021 levels, that would suggest that it is supportive of growth and thus supportive of inflation moving higher. We also have to watch things like oil on the move. Gasoline prices up 11% over the last month and a half. And let's not forget, copper moved a lot yesterday. This is all signs that there is this cyclical reacceleration brewing, which doesn't necessarily say the Fed needs to cut today, needs to cut now in order to get in front of some brewing weakness.
Howard Marks did get in my head a little bit, and I was thinking last night, what are the risks that aren't being priced in accurately? Where is sort of the asymmetries right now in the market? It strikes me that the idea of reinflation is not being priced in. Where is it most not priced in?
I think you're right, which is that if you look at cyclicals versus defensives, it seems to suggest that there is some reinflation going on, some cyclical reacceleration, which just means that yields at these levels probably are mispriced if that reacceleration happens, simply because you've seen this movement lower in the 2-year, and the spread between Fed funds and the 2-year still suggests the Fed's going to cut and cut soon. If the Fed doesn't cut soon, then maybe there's some upward pressure on yields.
Hello, gold. 8 days of gains on gold. What a run. The longest daily winning streak going back to 2020, all-time highs. What is behind this chart over the last week or so?
We've been calling it the curious case of the gold in the night, because what does it mean? Does it mean reflation, or does it mean that real rates are peaking out? Gold typically is very associated with a weaker dollar and lower real yields. So if inflation is moving up, that actually pulls real yields lower, and that could be what's behind this gold move.
Is this central bank buying? What do you think it is? Is it that as well? I'm trying to figure this out, Bramo, because when we start to think about shifting away from the US dollar towards something else, and then you start to see this run up in gold, I'm wondering if it's more than just, say, the macro backdrop.
You have seen central banks favor gold purchases over the last year and a half, really since the Russian invasion and the response to that. You have seen central banks move into gold. You haven't necessarily seen investors. Strategists flagged this as that you're not seeing this rush into gold like you typically do at peaks. So this would suggest that investors aren't the source behind it, but it's central banks. I wouldn't go so far as to say this is the ultimate sign that the dollar's losing its reserve currency.
Why are you reading my mind?
I know the worry about the Liz Truss moment and
oh, you've been following Cameron.
I have been following a lot
of a broken record. Carry on, finish your thought, and then we can go there.
Because simply there's not a better option out there. You're not going to see a complete removal of the dollar as the central reserve currency, because where else will you go? There's always been talk of a basket of currencies, but I do think that at the end of the day, from neither party are we hearing any talk of budget restraint, which just means that we still have to keep in the back of our mind that there could be some volatility in yields when it comes to the funding side of things.
2 things. First, I'm so glad that you don't understand what gold is doing either, because John asked me about it recently, and I was basically saying, don't ask me to explain it because I have no clue. So I'm grateful that I was validated on some level. When it comes to this question of the budget overhang, so many people have come on, and I realize the Liz Truss moment is perhaps a little bit over your skis in terms of an analogy, but there is this feeling that it has to matter at some point, that this is a historically unique moment where the U.S. is basically borrowing its way to keep its economy booming. At what point does it become an issue, or do you think that this is just sort of the boogeyman that people raise when they don't have anything else to worry about?
Look, I think that it has to come along with stronger economic data. It's been interesting. We have seen a step up in coupon issuance year to date. However, it's been taken down really well, and yields have moved lower. But yields, we think, are moving lower because economic surprises are moving lower, meaning economic data isn't coming in as hot as expected. And so there's a very strong relationship between the 10-year and economic surprises. That seems to be more important than exactly what the Treasury is doing with its refunding.
I think that captures the week so far. We just haven't had those monster upside surprises on economic data this week at all going into payrolls.
And I'm looking right now at the Bloomberg Economic Surprise Index, and it has been trending significantly lower to some of the lowest levels of the year, to your point, which sort of raises this question of people taking that tail risk of reinflation off the table.
Even though the data itself has still been pretty decent, and we are looking for 200K today in payrolls. Your 10-year at the moment down a basis point, 4.07% on a 2-year yield. We're down a basis point to 4.49. Cameron Dawson's going to be sticking with us. Let's get you up to speed, up to date on some stories elsewhere. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Kristalina Georgieva is posed to secure enough support for a second 5-year term as the IMF managing director. She needs the backing of European nations and the U.S. to ensure the success of any potential bid. Sources say Georgieva's pursuit of a second term would come with the understanding that she has the support of France and Germany. Boeing is now linking worker bonuses to safety. That, of course, follows the Alaska Air door panel blowout earlier this year. Employees at the commercial airline division will now see 60% of their annual incentive score based on safety and quality metrics. Previously, 75% of the score was based on financial metrics. It's the latest of their moves to address quality issues at the company. The battle to ban TikTok heats up yet again. House Majority Leader Steve Scalise said he'd bring a bill to the floor next week that will force TikTok to sever ties with the Chinese Communist Party. He posted on X and called the bill critical to secure national security. In response, TikTok sent push notifications to some of its users, encouraging them to call their representatives and ask them to vote against the bill. The text read, "Stop a TikTok shutdown," and urge users to speak up now. That's your Bloomberg Brief. John.
Danny, thank you. So they're not in the business of interfering in politics, but then they interfere in politics at the same time by sending you push notifications.
Well, you know.
You notice that?
You know, it's okay. It's sort of pick your poison, right?
That's all right.
You want to.
Okay, we'll avoid that one today. Brammer doesn't want to go there. I tried. Up next on the program, President Biden setting the stage for November.
My lifetime has taught me to embrace freedom and democracy, a future based on core values that have defined America: honesty, decency, dignity, equality. I believe in America. I believe in you, the American people.
That conversation next down in Washington, D.C., live from New York City. Good morning.
Was going to keep Green World Cup. This is a three as the economic picture covering the intersections of Hollywood, Silicon Valley, and beyond.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything. It's Jobs Day, and Bloomberg has the report under surveillance.
We've had unemployment sat at 4% for 2 consecutive years.
This is a two-sided sword.
There is a softening in labor demand.
Today, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
This is a very strong labor market.
The White House has got to love this.
This is something huge they want to run on.
Where is the slowdown?
If you look at the reality, it ain't showing that.
The February Jobs Report, today on Bloomberg.
Equities on the S&P 500 slightly positive here by 0.1%. Yields a little bit lower. We're down a basis point on a 10-year, 4.07%. Under surveillance this morning, President Biden setting the stage for November.
I know it may not look like it, but I've been around a while. My lifetime has taught me to embrace freedom and democracy, a future based on core values that have defined America: honesty, decency, dignity, equality. What makes our moment rare is the freedom and democracy are under attack both at home and overseas. If anybody in this room thinks Putin will stop at Ukraine, I assure you he will not. My predecessor and some of you here seek to bury the truth about January 6th. Here's the simple truth. You can't love your country only when you win. I believe in America. I believe in you, the American people.
Do you think that joke landed at the start there?
I don't
think
know.
it did?
I think it landed with a couple people, but not that many.
I've been around a while. Here's the latest this morning. The president outlining his path forward in the State of the Union as a rematch against Donald Trump is all but certain. Biden looking to tackle key issues while easing concerns about his age. Biden continuing to trail the former president in several swing states. Anne-Marie joins us now from Washington, D.C. for more. AMH, how has this one gone down in the hours after that speech was delivered?
Well, let's just look to what Terry Haynes this morning saying that Democrats are giddy. But, Jonathan, that is because the bar was so low. If you look at what the polling was heading into this speech, YouGov, The Economist, said that only 16% of Americans polled had something big to expect from President Joe Biden. So with a bar that low, he was able to pretty much overcome it. He immediately went after predecessor, as he's calling him, the former President Donald Trump, never wanted to name him by name, but clearly this was a very political speech. And for more insight, I want to bring in Jeanette Lowe of Strategist. She joins me here in Washington, D.C. Let's start there. Everyone's talking about this was really about how he came out and not so much the substance of what he said. Do you think he cleared that bar for the American people?
Well, so the president had to kind of set this up, right? Presidential re-elections are about whether or not it's a referendum on the current incumbent, or does he make this a choice election? Biden's numbers are down. It currently is a referendum on him, and he needed to kind of change that trajectory. He needed to make it about a comparison between him and Trump. And I do think that he did do that. You know, he really tried to, I mean, it was more political, as you said, so he really tried to lay out where are the differences between him and Trump. It made the base very happy. We still have to go forward and see if it actually makes a difference for some of the key voters who are actually going to decide this election.
Almost immediately, whether it was NATO, abortion, January 6th, he wanted to show that big gap between him and former President Donald Trump. Which of these issues do you think voters actually care about?
Yeah, so I mean, I think that you're going to have different pockets are going to care more about different things. So, you know, I think to some extent he might be looking to those Nikki Haley voters when he's talking about NATO and Russia and Ukraine. He's definitely going to make a big focus of this campaign about women voters and talking about abortion rights and reproductive rights. And then he also kind of wants to remind people of what are the things that happened under Trump, what did happen with January 6th, and also kind of play that up as well.
Let's get into some of the policy. President Biden, early on in his administration, had Democratic control of the House and the Senate, and he's talking about tax policy that he couldn't get through then. Does any of this have a future, or is this just all political talking to the base?
So here's the one thing that I do think is really important. A lot of this was talking to the base. So if you step back and you took it just as if he would have complete power, there was a lot of spending in there. There was tax increases to pay for that spending, to pay for middle-class tax cuts. The big thing that we're going to be watching for is at the end of 2025, we have this fiscal cliff where all of the Trump tax cuts on individuals expire. And we are currently in a situation where we have a higher deficit, we have higher interest costs, and so no longer can Congress just say, oh, well, we don't have to pay for something. So if we're going to extend those middle-class tax cuts, which both the Democrats and the Republicans want to do, they have to start thinking about whether or not there could be other tax changes in play. And we even had the House Budget Chairman talking about this and saying that he now sees tax changes might have to be on the table because of these concerns.
If Trump were to win, what kind of tax changes could we see? Because he's talking about cutting taxes even more.
So he is. He's talking about cutting taxes even more. How they're going to pay for that is going to be difficult. Some of the things I think he's going to try to say is that he could use his trade policy to pay for it, since he wants to implement, you know, a 10% tax on all imports coming into the U.S. But that's going to be tricky, because when the reality actually does come next year, we actually have to figure out whether or not we can actually pay for any of these things, or are they not going to go through.
The one piece of, I thought, somewhat news, this nugget about mortgages. Americans clearly are struggling. It felt like he was speaking directly to Elizabeth Warren, the senator from Massachusetts, when he talked about this. Could you see that happening, and how would they pay for that? $400 a month for the next 2 years to help Americans get on the property ladder?
Right. So, I mean, I think he's definitely talking to the affordability issue, which is one of the big things that is one of his weaknesses in this election cycle. And that's going to be an expensive program to put into place. So I don't see it likely to happen, but I think that's something that he's trying to talk about, all the ways he could try to bring down costs for Americans when there's still this inflation problem.
When it comes to the economy, Jonathan ran through the numbers at the top. 15 million new jobs the president was touting yesterday, or some of them coming back after the COVID pandemic. You have an unemployment rate under 4%. We're going to get a jobs report today where people are expecting around 200,000 at least, at minimum. Why is this not resonating with the American people?
So basically, the price level of goods is what we think is the bigger issue, especially if you look at just like even food, people going to the grocery store, that sticks. Even if we have inflation coming down, the price level of goods isn't coming back down. So voters still see that. They see that every day, every week when they're actually going to the store. And so that's where some of the problems are. And then you do have the issue where, if you're paying a new mortgage, now you're looking at a 7% rate versus a 3% rate a couple of years ago. Those are kind of the bread and butter issues. That kind of really goes to what people actually really feel. And that makes it more difficult for people to know that, yes, the economy is doing well, but I'm still paying more, or at least I feel like I'm paying more. And that's a difficult hurdle for him to get over.
Yeah, absolutely. All right, Jeanette Lowe, thank you so much for your time this morning joining us in Washington, D.C. Jonathan, that was Jeanette Lowe, a strategist. President Biden trying to talk to Americans about issues that still matter to them when it comes to inflation. From Jeanette's point of view, maybe this idea of the mortgages, money to help Americans get on the property ladder could help. Yeah. I'm not sure if shrinkflation landed, though, the way the president wanted it to.
AMH, thank you. We can pick up on that policy. It's so frustrating. I see the same thing play out in the United Kingdom all the time. People can't get on the housing ladder. What's the solution? Well, for you and I, thinking about what's the solution, we're thinking build more homes, build more houses.
Clearly.
What do politicians always do? Demand side, demand side, demand side. Give them more money, exacerbate the problem.
Which just means that you're going to have higher prices, and it's going to make even a greater issue. There's this question of how long you can really do this, to say, I'll hand you a few bucks. You'll feel better. There's a question about how long you can do that before it becomes counterproductive, and I think, that'll be a conversation for another day, probably.
I went through those numbers. AMH touched on them. We can do it again. 15 million new jobs in just 3 years. We can have an argument about how many of those jobs were restored from the pandemic. I understand all of that. 800,000 new manufacturing jobs in America and counting. The president's words, unemployment sat at 4%, Cameron. Mm-hmm. It's amazing to see that, even though the Federal Reserve has gone from 0 to 5.5. How do you think we have ultimately achieved that in this economy? It makes no sense. If I told this to you maybe a year ago, 18 months ago, I think you'd be sat here saying, no, unemployment's going to be much higher than 4%, 3.7%. How do we do this?
Where's the pain, right? The pain that Powell promised us all the way back in 2022. I think part of it is because of fiscal spending and the support that we've gotten from the fiscal side of things. You tighten monetary policy, but you loosen fiscal policy. That, of course, keeps things somewhat resilient, but it still comes back to the sensitivity of short-term interest rates in this economy. We know that because we can contrast what's happened in Europe by contrast, where there's a lot more sensitivity to short-term interest rates, and yet growth has been much weaker. And I think that's the key reason why this economy has held up so well.
And that raised the cut first, ECB versus Fed. ECB?
Yeah, probably. Yeah. Probably simply because the data will support it, much more so. The data already supports it.
There's a whisper about April now. Did you hear that whisper this morning?
Yeah, well, people are trying to push it back because, again, to your point, why didn't they cut yesterday if they really thought that it was going to be that bleak? My question is, why are you not seeing more dollar strength? To me, the fact that basically you've got Europe saying, we're going to cut first, we're going to cut aggressively, the Fed's pushing, and there's strength. Really, it's an interesting cross.
A bit of dollar weakness on the screen this morning. The dollar index negative by 0.1%. Cameron, good to see you. Always great to catch up. Thank you. Cameron Dawson there of New Edge Wealth. Coming up on the program, Sarah House of Wells Fargo expecting unemployment to hold steady at 3.7% after a very hot payrolls report back in January. That conversation up next.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, paid PageRank, and SERPs. Video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
All-time highs going into payrolls. Equity futures on the S&P adding some weight to that rally, up by almost 0.1% on the S&P 500. In equities, looking at the Nasdaq, we're a little bit negative, softer, but no drama here. We're down by 0.06%. We are heading towards a third consecutive week of gains on the S&P 500. Switch on the board and get to the bond market. 2-year yield at 4.49 and down a single basis point. A couple of Mondays ago, 4.70. We've backed away. The data just hasn't blown out expectations in quite the same way as it did a month ago, Bramo, and here we are.
And the fund flows really back up just this yield and moves, the sort of bid into bonds that we've been seeing. TD Securities came out with this morning, that global bonds had their strongest inflows in the past week since January of 2023, focused on developed markets, in particular, the United States. People flooding in with the idea of rate cuts, the fact that reinflating economic activity doesn't seem to be a risk.
The ECB seemed to unlock some of that enthusiasm with the forecast that came out yesterday morning around 8:15 Eastern Time, just forecasting inflation a little bit softer than expected at the previous round of forecasts, and ultimately saying we're going to hit 2% by next year, which sort of begs the question, why aren't we going sometime sooner at the ECB?
Which is the reason why people are pricing in April, because why not? What is the argument against that? You also have now 100 basis points, a full percentage point of a cut priced in at the ECB. It raises some real questions, because if the U.S. economy is so strong, wouldn't you expect this divergence to play into the currency cross a little bit more aggressively? This, to me, is one of the biggest questions.
You're waiting for some parity calls that aren't coming at the moment.
Well, if you think about it, wouldn't you sort of expect incredible dollar strength if the Fed were going to cut less than the ECB, if the Fed had that incredible strength that they were facing off, where the Euros region was cutting growth outlooks? Like, why wouldn't this be an obvious catalyst for real moves?
I agree with you. And yesterday, actually, the euro was stronger on the session. We're back to 109 on the euro. A bit softer this morning, 109.35. That currency pair is negative 0.1%. You want to move, though, this week. Japanese yen, dollar yen. Wow. Yen strength, 147.08, big time in the last couple of days. We're down another 0.7%, let's call it, on that currency pair. So that is Japanese yen strength in the face of several reports. Let's start with the reporting here at Bloomberg. So yesterday we had two reports, one on government officials who seem to be okay with a near-term hike over the BOJ, another on BOJ officials who seem to be gaining confidence in the wage data. I think wage negotiations around the middle of this month are going to be absolutely critical based on the report from Reuters this morning, suggesting that maybe we could be good to go for liftoff later this month.
And wage negotiations among some of the unions have already had the biggest wage gains going back decades, right? So we've already seen this to some degree. Now we're seeing bond yields at the highest on the 10-year in Japan, going back to 2011 at something like 0.19%. What I'm looking at right now, though, basically is a market that is allowing the Bank of Japan to normalize without massive disruption. This is a sea change from last year, when everyone was saying if they were to move, it would cause some kind of unrest and a surge in yields. No one's saying that right now, and that, I think, is really telling.
This is a much better time. March is not October. If we were looking back to October and we had a 2-year at like 525, 526, 10-year back to, say, 5%, all looking at a long list of reasons for why bonds can sell off more and yields are going to go higher, and then the BOJ started talking about what they're talking about now. Different story. I agree with you. The backdrop's absolutely critical. It looks like they're getting a free pass to do something they've been looking to do for a long, long time.
So why wouldn't they walk through that door, right? And essentially people are saying they will, and that's what the market is pricing in.
Dollar yen right now, 147. Under surveillance this morning, your top story, President Biden setting the agenda for a race against Donald Trump in last night's State of the Union address. In a speech lasting a little more than an hour, Biden looked to draw a line between him and Trump as a slew of polls show the former president leading in key battleground states. The president addressing everything from wars abroad to immigration, the economy, and reproductive rights. Trump took to social media to respond, while Senator Katie Britt of Alabama delivered the Republican rebuttal. 1 hour, something like that, Bramo, plenty of energy, a little bit of anger at times. I know you don't want to talk about the performance, you want to talk about the policy, the substance. What can we take away from that last night?
So the one thing that I took away from it was actually not the lead, right? So I apologize in advance if anyone was looking for a review of his cadence or a review of some of the trolling by Trump afterwards. What I was curious about was China and how he compared his policy to Trump's policy and basically indicated that he was harder on China than his predecessor, right? To me, the fact that he said, I've made sure that the most advanced American technologies can't be used in China's weapons. For all his tough talk on China, it never occurred to my predecessor to do any of that. I want competition with China, not conflict. I was trying to extrapolate that out to understand what that would mean, because essentially the tit for tat seems to be escalating in a very material way. And this is the new front of the Cold War between the U.S. and China, and it seems like Biden's doubling down on it.
What do you think of that last line? The very last line. I want competition with China, not conflict.
Confusing, because it seems to be exactly in opposition to what he's saying earlier in it, which is banning certain American technologies from China, especially at a time when you have an actual policy in China to remove all American technology from Chinese government programs by something like 2037. And this is something that they're very seriously taking into consideration. This doesn't sound like just healthy competition. This sounds like something else.
Well, that word conflict is loaded, and I certainly don't mean hot war. No one wants that. But the word itself, you're in conflict with China if you're looking at banning their automakers from selling their vehicles in the country because you believe there are national security risks. You're in direct conflict with them over those issues.
I would reframe it also to build on that, to say, if this is what he considers competition, expect a very heated competition over the next few years that will lead to some real policy shifts and some real consequences for a lot of these companies.
If you're just joining us, let's get to the central bank wrap and then we'll talk about payrolls. This is the central bank wrap of the last, let's call it, 24 hours. Fed Chair Jay Powell giving 2 days of testimony on Capitol Hill. Powell repeating that cuts are coming once Fed officials are confident inflation is headed towards 2%. The ECB holding rates steady at its meeting yesterday, but keeping the door wide open to a cut in April. Concern growing among some investors that the ECB and the Fed could be on very different timelines. Meanwhile, the BOJ is looking at a very different policy. They might be exiting negative interest rates later this month. Reuters today reporting a growing number of bank officials are leaning towards a hike, which is why we've seen a little bit of yen strength on the screen, at least intraday so far this morning. We are just under 2 hours away from the latest payrolls report. Sarah House of Wells Fargo writing this. January's sizzling employment report shows the labour market, although cooling, is holding up remarkably well, despite tighter monetary policy. We look for the unemployment rate to remain unchanged at 3.7% and for average hourly earnings to ease to 0.2 during the month, alongside normalising supply and demand for workers. Sarah House, I'm pleased to say, joins us now for more. Sarah, first question, it's on everyone's mind and it has been for the last few weeks. Why won't this data be a repeat of what we got a month ago?
Yeah, so I think what we saw coming out of January is it is a real tough month for seasonal adjustment. We tend to see a lot of layoffs, and just the fact that we're seeing businesses hold on to workers more, I think that was a support factor that we saw in January, and the weather helped maybe in December. And